All right, we're live.
Good
Amazing.
morning.
Good morning.
How's
All right, how are you
everybody?
doing, everyone? This is awesome. It's way earlier than what we usually do. Very exciting. We're starting a whole new era of live trading here with the 5ers Live Trading Room. So before we get into the whole I don't know what to call it, Bloody Monday, insane Trump, whatever. Well, just a quick introduction to what we got going on here. So this is the new The5ers Live Trading Room. We are starting at this time every Monday, Tuesday, and Wednesday. And we're ending the same time as previously. So that is 9:30 GMT. We're starting and we're ending 3 p.m. GMT. And what we're doing is we're going to have 2 specific shows every day. And then between those shows, we're going to do regular live trading. So today we're starting with Dirk's Monday Macro Movers, where we're going to talk about some fundamentals, some Bitcoin, some overall macros of the market. And then later at the end of the live stream, we're going to have Dr. Diana, a psychologist and a trader. She's going to have her own show. And then on Tuesday, I'll have my own show. And then Victor later on Tuesday is going to have his own show. And then on Wednesday, we have Anastasia having her own show in the morning. And then we got Alex and Saul doing the end of Wednesday. So what we have here, guys, is we have fundamental analysts, we have day traders and scalpers, we have swing traders, we have trading psychology. We have everything here. We have the whole package here for you guys, and you can enjoy this live trading room throughout the whole day. And we're just getting started. This is just the beginning, and we have some very exciting news to share going forward. All right, that's the quick introduction to what we got going on. Dirk, welcome. Super happy to have you here.
Thank you. And I think we couldn't have picked a better moment to start this early with this show. I mean,
Yeah. Wow,
what a crazy past week. It's like, I told my wife this morning, can you like maybe pinch me? I want to wake up and it's like 2008 again.
Yep.
So much crazy stuff going on the markets. And I think you couldn't have come to a better place, really, and you couldn't have picked a better time to starting this. So you guys are going to get a nice and holistic view on what is currently going on in the markets. We're going to talk, of course, about some trades as well, some areas where we think like there are good things to pick. I have some cool stories, I think, also to share today. I heard earlier from Jonathan, you also had a little bit Forex trouble this morning, probably, no?
Yep.
And so we saw, of course, large spikes to the upside and downside, a lot of gaps, especially opening in Forex. So what we saw basically on the crypto market, like developing over the weekend. And I don't know if can you share my chart very quickly for me, Jonathan? Thank you. Where is it? Here it is. So what we saw developing here really in crypto now over the past day, we saw Bitcoin going down from here 104,000 to now 95,000. As a matter of fact, we of course went all the way down here to almost the low we had here on the 30th of January, which was about at 90,000. We were deflected here around at 91,500 US dollars. Going to talk a little bit about this more later on, of course. What I want to start actually with is like talking about, what in the world happened there. Why are the crypto markets crashing as bad as they are? Why does it seem like the stock markets also, if we look here at the S&P 500, I don't have like a pre-market yet. Do you have a pre-market already for the S&P 500 and Nasdaq, Jonathan? I think I picked the wrong charting, wrong data provider.
If I have the pre-market data.
Yeah, let me check real quickly. I mean, it's just a Google away always, no, isn't it?
You should be able to add that to TradingView.
Yeah, for sure it is. Yeah. I'm just going to go here now with CNN. It should be a reputable source as well. So right now we see pre-market the S&P 500 futures trading at 5,974. So we are under this, I mean, from a psychological standpoint, important number of 6,000 again. Still a bit of way here from the bull market support bands. More on that later. Also, when we are talking more about trading strategy, we are seeing also, and I think that's the more important market really people are looking right now, the Nasdaq futures also with quite another, we have to say, severe down move pre-market right now at 21,200. So that would be a minus of 1.8%. It's going to be interesting to see. I think we just got actually the first data here. It's 4:40 a.m. I think in New York right now, also for stocks in. So we can see here NVIDIA pre-market now at 116. So that's another 3% down. It's going to be, by the looks of it now, I don't know what's going to change until the markets really open. Still a couple of hours to go, obviously. But for sure, going to be a red day. So we're probably going to see a little bit of stocks catching up on what we saw developing in crypto over the weekend. And as it always is, when stocks are performing not well, then suddenly all this talk about crypto, being a hedge against risk on, it gets caught up by reality again. The reality being that Bitcoin or crypto, in reality, is also a risk on asset that is going down by a larger margin usually when stocks are going down, especially tech stocks. And we saw this unfolding here in Bitcoin earlier today. And I got in my community asked a lot of questions this morning, specifically the question always, Dirk, should I sell now my Bitcoin stash? Should I drop my altcoin? Because obviously, if we look at Ethereum here, it was once again hit even harder than Bitcoin. Jonathan mentioned something interesting here before we started the live stream today. It's kind of nice how technical analysis sometimes can work, or zones of support and resistance, because it reversed exactly at this last major low we had here back in August of 2024, talking about Ethereum now. Nonetheless, we are at the moment trading under the bull market support band, which not necessarily is a good thing, in my opinion. So what's more interesting here is in Bitcoin, actually, nothing has changed pretty much. We are still looking here at this sideways zone, I want to call it. So somewhere between the last all-time high, I'm not going to put it directly at the wick now, and the kind of bottom zone that we were seeing here. So around 90 to 91,000 being the bottom, and 108 to 109,000 being the top. So nothing has changed there very much. As a matter of fact, what we are seeing right now there in terms of correction is pretty normal. So we've so far seen a correction from the last all-time high that was not that long ago. No, we're talking about actually just 2 weeks ago on the 20th of January, a correction of around about 16.7%. Now, if we were talking about stocks, of course, that would be super, super much. But for Bitcoin or for crypto in general, this is kind of a normal Monday, admittedly, because we very often see in these bull markets pullbacks all the way down to those bull market support bands, which is here the red line and the yellow line. Very often when we see this, our weekly moving average on a daily chart, by the way. So very often when we see the weekly close underneath this blue line, which is the 8 weeks moving average, we see the market correcting all the way down here to the bull market support bands, which are currently trading between 86 and 88,000 US dollars. And we also, again, we don't have to go too much into the past when we saw the last time after a steep rise of the price of Bitcoin. So last time, let me look for the correct drawing tool here. Here we go. You might remember beginning of January 2024 when this whole ETF hype hit the markets. The spot Bitcoin ETFs were about to launch. We saw prior to the launch also a new all-time high. So going all the way up here, and then a correction. And back then, this correction from this back then new all-time high at 74,000 US dollar also led us all the way down here to the bull market support bands. And this was a correction of 23.5%. So we still have a little bit to go if history repeats itself. And I don't see why it shouldn't, because if you look at the pattern itself here, so if we look at the whole market structure, like this whole thing we are seeing right now, this area looks a lot like what we saw there as well. So we could potentially see the market Bitcoin in this case, and if Bitcoin is correcting, altcoins will be correcting, of course, as well. Maybe even this week already, who knows, all the way down here to either the red line or even the yellow line, which is somewhere between 20 and 22% of a correction. And that would still not mean that the bull market is over, because we can look here at my go-to chart, which I think Jonathan is also showing very often now, the logarithmic regression for Bitcoin. If we look here in 2017, in 2020, so there's a line missing there, an arrow missing. So this one here, we can see that it was quite normal that we had this severe slumps. They don't look so severe anymore looking back now, but believe me, back then, when we had the slump down here, oh, wow, look at this. This was 20% as well. So this is quite normal that we see a lot of this action until we finally enter this zone here, this black zone, which I always call the bull market frenzy zone, which then should lead us up to the higher bands here to what is going to be the cycle top. Now, the only thing that kind of puts wrinkles on my head at the moment, or actually there are two things that are putting wrinkles on my head at the moment and making me doubt myself a little bit, are that time is ticking at the moment. Because if the cycles are behaving like the last cycles did, like the last bull markets did, we should see the cycle top somewhere here between late April 2025 and late October 2025. And that's not so much time anymore. Yeah, if we're talking about April, that is pretty soon already. We're talking about like 3 months now, if it's late April. And so not that much time. The longer it takes now to get from this FUD, fear, uncertainty, and doubt phase into a new FOMO phase, the less likely it will be that we are going to see this exaggeration to the upside in the markets. Because later this year, I believe, latest in Q4, we are going to see some trouble on the horizon from an economic standpoint, which, and I think, if I'm not mistaken, you've shown this before as well, Jonathan, which stems from the fact that we are seeing the spread between the 10-year and 2-year US Treasury bills normalizing again. So we had a negative spread there, meaning you were getting a higher yield for the 2-year Treasury bond than for the 10-year Treasury bond, which is not normal. If you go to your bank and you ask them, I'm going to give you my money for 10 years, and they tell you, okay, we're going to pay you 5% in interest. And then you ask, so what are you paying for 2 years? Oh, we're going to give you 7%. You would be like, well, that doesn't make any sense. Why is that? They seem to need capital very urgently short term. So this expresses a short-term trust, so to say, into the economy still, but a long-term doubt of what's going to be. And what we see historically, and this is a pattern that worked in the history 100% of the time. You don't see this very often in trading and investment, that something always work, is when we have a period of where this spread inverts, so where you get a higher yield for shorter term treasury bills. Treasury bill means basically just you give your money to the government and you get an interest rate in return for that. And this is packed into a security, a bond. And so when this normalizes, so when we see the markets going above this yellow line of 0 again, this is normally when the market starts crashing a bit. Not only a bit, quite severely. So we saw this during the recession because of the Gulf War in the beginning of the 90s. We saw this severely in the dot-com bubble. We saw this, of course, during the financial crisis, markets crisis. So it started 2007, 2008. We saw this very short-lived during COVID. And we are now coming out of a period. We just came out of a period where we had an inverted interest rate spread for 2.5 years, which is something I've never seen before. And of course, I'm asking myself, if the inversion was so long, how long is the recession going to be? As a matter of fact, we are seeing this already here in Germany. We just had a negative 0.1 gross domestic product growth year over year. That is already the definition of a recession. Now, in Germany, we are very dependent on auto manufacturing. Nobody wants to buy German cars anymore at the moment, especially not China. So, it's like very dependent on this. But I'm really asking myself what is up there on the horizon. And the longer we see the markets doubting this as well, the more I'm convinced that the severe, the frenzy phase of a bull market, not only in Bitcoin, but also in stocks, is going to be rather short-lived, maybe. I mean, that would be something new as well. We saw a new all-time high before the halving this time. That never happened before. So maybe we are going to see the bull market rather short as well. Or we are going to see Bitcoin staying within this green channel here, which is kind of, the fair price. So the middle green line would be, according to this logarithmic regression, the fair price of Bitcoin. Nobody says it has to break out to the north. Nobody says it has to break out to the south underneath this channel. Could also be that the models are breaking down, and we need to come up with something new. That would be typical too. Every model only last for, or every trading strategy, every investment strategy only lasts for so long until reality catches up and you don't see the alpha anymore, because if everybody's doing the same, everybody is expecting the same, there are always people that will front run, that will make the alpha on this trading strategy, so there's nothing left for us anymore. But at the moment, it's really nothing yet to panic about. And I mean, I can understand if you are somebody who went like 100x leveraged long at over 104,000, you probably have been liquidated this morning or yesterday already, or you are looking at some quite severe losses already. Understandable. So this would be a lesson in, keeping your leverage down again. What we see on the market, we saw a lot of leverage positions being liquidated. What's going to be very interesting for this week for sure is the data we are seeing coming in. We saw last week interest rates stayed the same. So the Fed didn't lower the interest rate. The market participants are now, for the meeting on the 19th of March, also the majority at least expecting that interest rates are still going to stay the same. Why is that? Because the Fed made very clear, Jerome Powell, in his press conference, made very clear that for the moment, the Fed is not planning to cut interest rates further. And why are they not doing this? Because they are afraid of inflation rebounding. And they are afraid of that for a good reason, because we are seeing the release this week of something which probably a lot of you, especially if you're trading Forex, are looking at, the so-called non-farm payrolls and the unemployment rate, which the unemployment rate is still quite low with 4.1%. It means like the job market is still very much intact. An intact job market means that more people can find jobs, leading to a higher inflation probably, because people have more money in their pockets. They can spend more money to buy goods, luxury goods, food, whatever, pay rent, and so on and so forth, which is in America at least, because it's a very consumption-based economy, a very good driver for inflation. The Fed doesn't want to see that. The Fed wants to see inflation around 2%. And we are still quite away from 2%. At the moment, we are still at, I think 3% was the last reading, around about, or 3.4%. I'm not so sure at the moment. One thing I like to look at here is, and maybe you want to do the same this week, is not so much the non-farm payrolls, but the reading we are going to see here on Tuesday. Now, don't be confused, please. It says here 11 p.m. Because my trading view is on GMT +8. So that one is usually at 3 p.m. Central European time, I believe. And so the JOLTS job opening, very much like the non-farm payrolls, they show like all the open positions that are not filled currently outside of farming in the USA. And what you can see, or what you could see, I have to say, in the past was that whenever job openings declines, meaning less open jobs were available, meaning the economy is probably not doing so well at the moment, we saw stocks declining. So you have a green line here, which are the JOLTS job openings, and you have the purple line here, which is the S&P 500. So they pretty much always went in sync, even during Corona. But what we've seen here now since, it started actually in late 2003 is that this is diverting from each other. So we are now since then seeing a rising stock market and job offerings that get lower and lower. So that doesn't make really at first glimpse sense, right? There are less job openings, meaning like the economy is doing not so well. Employers out there are hiring less people. So why should that be good for stocks? Well, this is because what the market currently is looking at, or has been looking since inflation coming down, were the interest rates. The markets are addicted to cheap liquidity. The markets are used to the Fed, not only the Fed, worldwide central banks having their printers go brrr and pumping markets every year, pumping new money every year into basically the economy. You can see this here by something that's called money supply, M2, and you can see how much it started rising actually since the financial crisis of 2008, with really a bump up here then in the late 10s, early 2020s. And at the moment, we have an interest rate of 5.25%, 4.75% to 5%, sorry. And the markets came from an interest rate environment of around about 0%. So this is kind of what the market wants to see again, 0%, which means like companies, wealthy individuals, they can borrow cheap money. They don't need to pay hardly any interest rate for the money. And what are they going to do with that money? Well, they're not putting it on their bank account. They are investing this into stocks. They're investing this into real estate. They're investing this also now into cryptocurrencies through the ETFs. So this is what the market wants to see. And this is why the market is reacting badly at the moment when unemployment numbers are good. This is, for me, like another sign that something under the hood is not right at the moment of the market. There's a severe dysfunctionality. If I want to get a little bit philosophical, I would say like this is an expression of the inequality we are seeing nowadays, that the rich get even richer and that the middle class is eroding. Because if you, now speaking for the USA, you look at the average citizen there, they can barely afford their rent. They can barely live from week to week or month to month. So they don't have the money to save into stocks or buy real estate or finance real estate. So they cannot tap into this liquidity stream that is coming from the Fed every year. Because this is not, of course, not directly going to the household. This liquidity is going to banks, or is made available to the markets by banks giving out loans. And who is getting the loans? Well, corporations that are interested in cheap money, that are already wealthy, and especially wealthy individual people also. Because if you are wealthy, and I've seen that firsthand many times. Let's say you have like 100 million in cash on your account, and you, of course, righteously say like, I need to invest that money. Are you going to take this 100 and invest the cash? No. You're going to go to your bank. You're going to tell your bank, you have 100 million from me. I want 100 million in loan from you. And then you're going to, maybe you get that loan for, at least like a couple of years ago, that was still possible for, let's say, 1.4% or 1.5%. And this money you are then going to invest into stocks. This money you're going to invest into risk-on assets, real estate, maybe a little bit of crypto, Bitcoin nowadays as well. So you actually don't need to touch your liquidity, and you're still going to have a revenue. It's still going to make you richer, because on average, the stock markets are growing by 8% every year. And this is something that's available for large corporations that are already doing well. This is something that's available for rich individuals. This is not something available for, us retail traders, us everyday people. When I last time, when I bought my first house, which was like 25 years ago, back then the bank would tell me, how high is your income? No, we are not interested in money putting down. We want your income for us. So this is what's going on. I'm actually planning on doing also a rather long video on this because I think this is like the trade of the next year. And it sounds a little bit mean when I say this is the trade of a next year, because it's basically a trade that is capitalizing on growing inequality. But this is what the reality is. No, you have to trade what you see and not what you wish for. I wish it would be different. I wish that eventually we'll come to solutions that are outside the scope of a full-fledged revolution. Something like, like 70, 89 French Revolution or whatever. I hope at least. So sorry, I think I diverted a little bit. This is, of course, nothing that's going to be important for this week. If I have to choose for this week, I would primarily really have a look on those JOLTS job opening. And if there are more job openings than expected, you can pretty much also expect usually that the number for the non-farm payrolls is also going to be higher. A higher number for non-farm payrolls then will result in what we saw already a bit unfolding today in euro dollar, maybe trading soon around parity again. Now, we had, of course, quite a large gap here this morning. Yeah, we went, and this is, in my opinion, really the obvious downside also, or the upside crypto has versus like legacy markets versus Forex and stocks, that crypto is trading 24/7. If you were long euro dollar, or in general, if you were short the US dollar, let me put it like this, you were in for a nasty surprise this morning, because we opened with quite severe gaps. We're talking here alone in euro dollar. What was the gap here? That was over 100 pips, no? In gap? No, almost like 75 pips or something. Jonathan, correct me if I'm wrong, please.
Yeah, no, we had some insane gaps.
Insane gaps, yeah. And of course, against something like this, a stop loss cannot protect you, because you're going to get the gap price then. You're going to get filled for the gap price. And this is not the fault of your broker, not the fault of your prop trading firm. This is how the markets are sometimes. And it's something that doesn't happen very often because it's such a liquid market, obviously. But it's something that with somebody like Trump that has such a loose mouth, really, and I think sometimes just says whatever is on his mind currently, or whoever he dislikes or whatever. And for some reason, he seems to dislike everybody at the moment outside of the USA. So that's why all this talk about terrorists at the moment. You kind of have to be prepared. We saw somewhat a market behavior like this after Trump's first election as well. Later on, it kind of normalized then, maybe because of also COVID came into the focus back then. But you have to take, if possible, accounts. If I have to choose at the moment, be careful with holding a lot of positions over the weekend. Can, of course, also result in a nice upside for you, if you're on the right side of the market. But for whatever reason, normally when something like this happens, one tends to be on the wrong side of a market, at least from my experience. So, yeah, I'm going to very closely monitor what is going on the political side. If I look like at the order books, especially for stocks and cryptocurrencies at the moment, I can also see that they are not behaving in a way that they are normally do. And I cannot like show you facts about it. It's just like the way the market moves is like very one-sided. And so I'm trying to stay out of the market as much as I can this week, except I see those rare chances, like I told Jonathan earlier, when I woke up this morning. As always, the first thing is you turn your mobile phone on, you look at what the markets are doing. And I saw like, wow, yesterday I went to bed, Bitcoin was still trading at 98,000. Now we're at 93,000. So when I was having breakfast, I bought some Bitcoin at 94,000, which I sold then around 96,000 again. These are good chances. If you
wait a minute, I'm terribly sorry for just jumping in and interrupting you, but did you just tell me that you're trading during breakfast?
Yeah, because it was like the chance, I saw it. I was like, come on, this is like too much to the downside. Buy a little bit. We're just talking about, I think I had a position of 20,000 or something. Not 20,000 Bitcoin, $20,000 in Bitcoin. A little position. And I felt like the chances, in my opinion, since we already bounced off of the natural resistance down here at around 91,000 were higher, that we see a pull up back to the 8 weeks moving average, which actually is at 98,000. But at 96,000, I thought that doesn't happen very often, that you go to work and you've already earned $400. So what the hell? I don't do that very often. Like trading
I
on a gut feeling. So I thought like,
yeah, man, I woke up and I looked at the market and well, the first thing I do in the morning is obviously, I try not to check my phone, but after a weekend like this, it is the first thing I do, and I checked your used, and I'm like, wow, that's insane.
It's
and then
insane,
I looked at another position I'm in, and I'm like, well, okay, that was a big gap down, but at least I'm not stopped out. And I'm trading with I'm not going to name names, but probably three of, including the 5ers. I'm trading with the other biggest prop firms out there. I'm still in a position on the 5ers, but I'm stopped out on everything else. And Oanda slipped me such an insane amount. I've never seen anything like it. So I need to send a mail to Oanda, and I need to ask them, like, what is going on here? Because I had a position open. It was 110 pips above my stop loss on market closed. It gapped down 50 pips and slipped me out for 50 extra pips.
Because they widen the spread so much, and you are stopped out on the bid spread then probably, which is a tactic. I used to work for a forex broker. This is a typical B-book tactic. B-book meaning they win if you lose. It's basically like betting. You could as well run a casino or whatever. But this is a big income stream for a lot of brokers, and I've seen that very often in times like this, where the market is going haywire. Very often they are also on the wrong side of a market, so they need to get money from somewhere. And what they do then is they widen the spread and tell their clients, oh, so sorry, no liquidity in the markets. That's why you were stopped out. And very often when the spread was the lowest point was exactly where your stop loss was. It's a simple game they are doing. It's a rigged system. So I can only, in times like this, you really see actually who are the good brokers. And I mean, the 5ers seems, if they didn't stop you out, if everything okay, they're still, it speaks for them, in my opinion, without, wanting to do advertising yet here. But this is the way it should do, because it shows the broker is not trading against you. They are routing your order to the market. They are earning they are earning off commission and not off your loss.
Yeah, I mean, we're not. I mean, we're fully transparent here and honest. And of course, I did get slipped on the 5ers as well, but less than I did on the others. And I have open positions now. I'm going to tell it as it is. You have slippage. You have Trump imposing these tariffs. It's something that these types of moves we have not seen in the market, and this is just a normal part of market dynamics. But I must say that I'm very now. This is something that. Imagine if Oanda comes on here and actually see this. Well, I might screenshot this and attach it to the email. Like, give me my money back. No, but
be careful that you don't get a lawsuit, man.
This is an issue that I keep having. Like, I've connected my TradingView. I connected my Oanda to TradingView, and then I connected Oanda to CopyTrader. So I'm trading within TradingView, and everything gets copied over to the CopyTrader. Yeah. So I stopped doing that in the past when I was, more, day trading and trading lower time frames, because then the prices are a bit different, and you have slippage on Oanda, which doesn't help. But I figured, well, now that I'm taking more of swing trading, I have 100 pip stop loss. That probably is not going to happen. But then you have the over weekend risk, and I seriously need to perhaps rethink me holding positions over the weekend with Trump in office, especially when we know that something might happen over the weekend. But it's a bit problematic, because if you exit a position on Friday with the idea of entering again on Monday, you get the whole risk dynamic of that trade is changing. So the game that we're playing here, the game of trading it's a complicated one. It's a very complicated one. And I'm lucky that, I've you start using Victor's risk management, because without that fractional risk, I would have been down quite a lot on my account. Now, luckily, I'm only risking very small positions and adding on confirmation. And I think we all need to think about that today. Like, how were we hurt today in the market? Where we slipped? There's no need, unless you're trading with Oanda, there's no need, pointing fingers at exchanges, or brokers. But we need to, take a step back, relax, and see what did we do to put ourselves in this situation, because it's not anyone else's fault than our own. We choose to enter these positions. We choose to hold over the weekend with knowing that Trump were going to impose tariffs. So it's none other than our self-faults as traders for losing money. And that in essence is, I believe, one of the difficult things in trading, because in normal job, I can always go to my boss and say, like, this happened and it's your fault.
Yeah.
Basically. And this is not possible in trading. It's so
trading
how
is
you deal.
It's all about ego, no? Funny enough is, this is actually an interesting question. I can ask, what is the name of a lady who's joining us later?
Diana.
And she's a trading psychologist, you says.
Well, she's a psychologist turned trader, so I guess she's
very interesting
trading psychologist.
Because, like, one of the thing I noticed, and I want to ask her that question actually later, is like, all the traders that I know, investors and traders that have been long-term very successful, are normally very modest persons. Modest in the way that they don't have like a big giant ego. This thing like, oh, I'm always right, whatever I do, I cash out here, blah, blah, blah. I'm the biggest in the world. They are all like very like, humble, actually. Humble in a way that they say, oh, the market did what I expected. I'm so grateful for that. And I wonder really if this comes from experiences like this, where the market just teaches you a lesson, where you're not doing something right, and then the market teaches you the hard lesson on a thing you probably weren't expecting. We have a question there from Yasin. No, it was from Rahul, sorry.
Yeah, Yasin is our moderator in the chat. So we're having We're having some minor issues with the dashboard, and that is currently being resolved. So it's going to be it's taken care of by the dev team, as you can see here, and we're working on it, and it will be resolved shortly. So this is maybe a good opportunity to take a step back, relax, and look at your risk management approach after these moves that we're seeing right now.
Absolutely, I absolutely agree. And
I wanted to ask you kind of like some questions that I feel maybe people are thinking or wondering about here. So
ask.
What's happening here going forward? So what we're seeing right now is the dollar. The dollar is driving the market. So
the dollar is dropping.
Looking at the dollar. Yeah. What's in store for us here in going forward? Because I traded. I've been building positions based on a possible reversal in the dollar. Now, again, didn't lose a lot of money. I started with very low risk and was going to be adding on confirmation, but that was the general idea. And I was very, very well aware of the possibility of dollar strength from tariff and inflation going up because of tariffs. But that was a bet that I was taking, and unfortunately, that I lost on that bet. But I think that is the trade, but the timing is very difficult. The dollar is going to top out eventually, but when?
That is a question. I wish I could answer this question. I mean, what we're seeing right now, what we've seen since the election of Trump, actually rising stock markets and a stronger dollar, is very unique already. I cannot remember when we saw that actually for such a long time, to be honest. Normally, you see a strong dollar means like we have a crash-like scenario, so something like we are seeing today. We're also probably going to see weaker markets. But the question is if we're seeing the rebound. If I look at euro dollar, we kind of hit the low there this morning already on almost exactly the the 61.8 retracement from this large move here from September 2022 until the very top July 2023. So here again, Fibonacci levels, if you want to take position in line with other, of course, areas of support and resistance, can very much help you here to find those areas. If you are brave enough, for example, to bet now euro-dollar is maybe going to close the gap eventually this week. But yeah, it's a very political driven market. It's a Trump-driven market. We cannot forget, and this always comes to my mind, like that prior to the election, when you kind of got the feeling already, hey, Trump might actually win this election. One analyst, I don't know who it was anymore, always said, guys, if there's one thing you can be sure about Donald Trump is that he's like a very pro-US dollar strength president. And we see that playing out right now. And yeah, we might see a bounce back to 104, 104.50, maybe even to 109 or whatever, But during his presidency, I would suspect more that we see a stronger US dollar. So either as US dollars staying around this area here somewhere between 1.0 and 1.10, or maybe even a US dollar trading at a higher value than the euro. With all these talks about tariffs, don't forget, like, tariffs generate demand for the US dollar, because usually if an international payment system, so if you are somebody here in Europe, for example, or India, it doesn't matter, in the world, and you want to export something to the USA, the payment is usually settled in US dollar and not in your local currency. This is one of the benefits of the USA, that they can pressure importers, also exporters to the USA into settling into US dollar, basically taking the conversion risk off the shoulders of the local importers. And so we need to be aware of that. If the thing about Trump is, and this is something I cannot judge, is like what he's saying today, like about all the tariffs and so on, is that based on actual facts, or is that just his ego speaking? Because I have a feeling very often it's like Trump's, for example, we saw that I think like in the last days now, when Canada started retaliating against what Trump said like, hey, if you are going to, put tariffs on our good, we are going to put tariffs on your goods as well. And then Trump comes and doubles down, you guys, Canadian citizens, you should revolt against your government. You should join the USA as the 51st state. So it's always the ego, all the stories about people who he had beef with in the past. The FBI agents, for example, that raided Mar-a-Lago and were searching for compromising documents, they were all fired now, because they personally attacked Donald Trump, which is very, very dangerous to have this kind of behavior for somebody in a position.
Well, I would do the same. I would probably do the same.
Absolutely, yeah.
Yeah, if they raid my house, they're out of office.
They raid your golf resort, yeah.
Yeah, dude, they're stealing my ledgers. They're out of here,
and you're out of there. This is so you never really know what is going to happen. I hope at least that like long term or middle term things are kind of going to get a little bit quieter right now. But another thing is, and this is like when you see like somebody like Elon Musk, for example, what the story, like installing hard disks and software in the data centers of was it the Fed or whatever, so he can control payments there? Or
I think it's like the I don't know exactly what it's called, but I think it's the federal, like
there's so many stories like this at the moment. It's like hard to keep track really and understanding and reading them all. The thing is, like, one thing I learned in all my years about very rich people and people who are in a position of power, I'm really talking about high-ranked politicians. I'm talking about individuals that are spearheading, that are leading large corporations like Amazon, Apple, or rich individuals that are billionaires in cash and real estate, is those people usually don't think like we do. When we now talk to each other, we speak what's on our mind. We want to exchange ideas. They go into a conversation with a specific goal, and they will say anything to reach that goal, even if it contradicts what they in a prior conversation said. And looking at what is going on at a high level politics like this, I think explains a lot in the behavior of somebody like Trump. Explains a lot about what Elon Musk is already saying, who's like, I'm super anti-immigration, but at the same time, he wants a lot of the somewhat visa holders coming to the USA, because obviously the USA needs workers as well. Cannot just kick anybody out. We already see like stores and agriculture there without anybody working anymore, because they were all so-called illegal immigrants who are afraid to be deported or are deported already. So be aware of it. Always ask yourself, what does that person really want? And at the moment, I honestly speaking, I don't know what Trump wants. I don't think it's like, I want to make America great. I don't know what the agenda is there. So I cannot with a high confidence level tell you this is what's going to happen to the US dollar. If I follow my hunch, I would say the US dollar goes stronger. But, I have been negatively surprised by Trump many, many times. So I wouldn't bet on it.
It's difficult. It's definitely difficult to get a read on Trump when looking at it's definitely difficult to get a read on him. But what we can see is that the things that he talked about implementing in terms of tariffs is coming to fruition right now. And what the threats that he made about tariffs that I thought were going to be played down did absolutely not get played down. He went through with that 25% on Canada, I believe 25% on Mexico as well. And he tweeted, and it's just absolutely insane that where he's using his Truth Social as like his platform for reaching the world, talking about how he might also like, or he basically said, we're going to go after EU as well. So, and like you said, there's a lot of ego in politics. There's a lot of ego. Of course, we're going to find honest, good politicians as well, but there's definitely a lot of ego. And I think a lot of politicians, they have this idea and they kind of merit this idea, and they're going to go through with this idea no matter what. And they're fighting for this idea, and that's probably also why they got elected. So they kind of have to fight for that idea. And I mean, looking at the dollar, it's actually quite interesting. If I'm just going to pull my chart up here, because we had a question on by
the way, just very quickly, because you said like they have to go through with the ideas. That's like the fundamental difference also between a politician and a trader. No, our alpha lies in being flexible with our opinion, in changing our opinion to reality. As a politician, at least this is what they feel like, as it seems. You cannot change your opinion because it makes you appear as weak. People would say like, oh, this guy, he changes his opinion all the time. I won't vote
exactly. And I think it's changed. And that's a critique I've been getting a lot in my career as a trader, because I think people see that as a weakness. But as humans, we are, being adaptable and being able to change your ideas. Like we all have fundamental ideas, and a human being that is able to change a fundamental idea that they have based on facts are a very good sign of intelligence, right? So, and as a trader, you need to be very flexible, very adaptable in your ideas. And that's the thing. Now I had a very solid idea, and I was very, very like 100% into this idea that we were going to see USD dollar strength. I was so convinced that was going to happen. And now today, I don't even remember almost thinking about that idea. It's just not part of me anymore. I've just taken that idea and I throw it away. I'm very adaptable in that sense. And that's what we have to, what's that saying? You have to be, you have to, what's that idea? You have to be rigid in your expectations, but you have to be rigid in your, okay, there's a beautiful saying that I wish I remembered right now, where you have to be very, I'm sure someone in the comments are going to be helping me out here. Be like water. That's not the one, but yeah, water is
it's
like
kind
water.
of
I'm going to be
nice
drinking
metaphor actually. Be like water.
Yeah. And but again, back to what I wanted to show. This is when Trump, he was elected last time in November 16, right?
Yes.
Yeah, so 2016, and then we have here this time around. So we are seeing we're seeing the same moves, right? We're seeing expectations. We're seeing expectations here. Trump gets elected here. The dollar pumps, so it goes up, goes down, goes back up, but creates a lower high. It goes up significantly, back down, and maybe this is the equal high. Maybe we'll see a weekly lower high here. We don't know.
I think somebody commented also on this earlier, saying like last time, the dollar went weaker under Trump eventually, which absolutely is correct.
Yes,
the only difference, in my
we have-
opinion, is that last time he didn't know yet what he was doing very much, because this was all new to him. He was not a politician up to that point. Now he knows how things are run, so to say. No.
Yeah, and we have to also think about this in terms of cycles, because that's basically what we're talking about. We're talking about a 4-year period. We're talking about a mini cycle within the financial market, which is the US presidential cycle. We have a mini cycle within a larger cycle. That larger cycle, I believe, is the credit cycle, and then we have the presidential cycle within that cycle. And I believe that we are at the end of the credit cycle. And if we look at if we just look at the dollar, this is the chart of the dollar, and I'm going to remove all drawings. And if we look at this from a cycle perspective, looking at the horizontal lows and the highs, this is the low in 2018. This is another low in 2021. So we're talking about like from 2018 all the way to 2021. This is one cycle, right? Where you have a low goes up to a high, back down, and so accumulation, distribution, accumulation, and then boom, all the way up, distribution. This is obviously something unprecedented, something new, and that's where we had COVID. So this was the influx of the credit in during COVID, and we're now seeing back to this cycle, I believe, with this range, and now we're kind of breaking above this range. So looking at it from a cycle point of view, we can definitely come up and test the very highs here, and eventually the dollar will weaken, but the question is when. And I think it's important as traders that we understand that you have to make sure that you practice good risk management, because you're going to keep on keep that capital until the idea comes along. Because trust me, when the US dollar is shifting, we're going to see a cycle top. I'm so certain with that. And if you're able to get in at the beginning of a cycle, yeah, you're gonna be in some good positions. That's what I'm trying to do with Euro USD. I'm trying
by the way,
to get in.
Sorry, can you switch back to Euro dollar just one time and zoom out a little bit again?
This is
the US dollar index here just now.
Right here.
So if you zoom out a little bit, so we can see the last time.
Yeah.
A bit more.
Okay, so we're back in 1995 here.
Oh, sorry, zoom in. Yeah, no, I mean zoom in so we can see like 2015 going forward.
Okay, so 2015 is here. Okay.
This looks like eerily the same, like under Trump's last president. We had like this double top, then we break out to the north, and then maybe things come in. Now, I haven't seen this pattern before, though. Thank you for pointing that out.
I think
that is very interesting.
I'm trying to really zoom out and look at the look at the patterns and the cycles here, and I'm looking at the weekly and daily, but sometimes I've something that I've started experimenting now is looking at the 3-day chart, because I like the 3-day chart. It's right in the middle between daily and weekly, and I quite like that. If you look at the 3-day, you get a good sense of the overall cycle, with also having that intraday intra-week volatility. And I must say that I do see signs of a shift. I do see that breakdown as a possible shift. You have that level right there. I really like this level as a top on the US dollar. I really do that. But of course, now I'm just sidelined. I have to be sidelined now. Gotta be careful.
That is
all right. We have Victor coming in, so I'm actually going to be leaving you to do whatever you do best, and I'm going to be back in When will I be back? I will be back at 12:30 GMT. I'll be back, and then I'll be also bringing on Deanna for that trading psychology session. All right. Thank you for, I guess, thank you, Dirk, for having me on here.
Oh, it's the other way around for the first time. It was
Yeah.
my pleasure. It was my pleasure. I'm looking forward
All right.
to next Monday already.
Yeah.
Hello,
definitely.
everyone.
Victor,
Uh,
hi.
How is everyone doing? Jonathan, thank
Yeah.
you for opening our stream today. It's been a great moment. We are expanding and we're doing so greatly at a great moment to do so. A lot of
Yeah.
volatility.
No,
Yeah.
very exciting. Very, very
What I
exciting.
said
We're gonna do
earlier, we
this-
couldn't have picked a better day for starting something like this.
Yeah.
Really.
No, definitely. All right, guys. See you later. Take care.
Take care.
See you again soon, Jonathan.
Victor, I've been waiting for you. I'm super
Really?
interested in hearing, like, from your point of view, what you as a trader, how are you going to approach markets like this now? Because I know you're like looking really at the low time frames, and with volatility like this, I wonder if it's like a challenge for you as well at the moment.
Um, a- Actually, it's the only thing that changes is that I need to be more cautious with risk in the sense that not necessarily changing because of changing the rules. The rules stay the same, but I just have to check that I'm doing those rules, I am applying them correctly. So looking at the ATR, or how are we in terms of ranges normally, because today is not a normal day. This is typically not a normal day, right? We have huge news coming out. We have immense gaps over the weekend. So it's not a typical day. So we need to be in my point of in my way, I need to be more defensive, right? So double checking everything. However, in applying the rules of my strategy, it doesn't change anything. I will still apply the same rules, even among this. The only things that change is the ATR, which I need to make sure that I'm reading the right ATR and not something that is outdated and is not reflecting current market condition. But I'm just gonna read price and go with it. As we speak right now, maybe I should put on my screen as well.
Yeah, please. I think the guys out there watching are really interested in how you're approaching this at the moment. It's interesting that you say that you're more cautious, because that is exactly my approach also for this week. I said already in the beginning of the stream that I kind of am tending. I'm mainly trading cryptocurrencies, like when we talk about lower time frame, but with a much lower position size, because I need to take into account the higher volatility. That my stops are farther away than usually they would be.
And that's the correct way to do it, because the range with volatility, you have range expansion. It's logical, right? That's part of intrinsically or inherently, that's part of more volatility. And that's how did you come about with that posture of being more conservative when there's more volatility? Because typically more volatility means there's more opportunity. But why are you scaling back instead of stepping on the gas? How did you come about having this posture?
Well, I think it's just natural, no? When you have more opportunity usually translates into I can catch higher moves, more moves, like to the upside. Those moves also translate to the downside. So maybe I have a profit target. Let's say we're talking about crypto that's like 2% higher in a long position than where Bitcoin currently is trading. So I need to take into account for that. Maybe I usually have a 0.5% profit target. So my stop loss would maybe be at 0.25%. So I need to adjust more. Now that my stop loss would be like 1% away, then I need to adjust my position size to a quarter of what I usually would trade to take into account. Because if I trade my same position size and my usual stop loss is 0.25%, is now 1%, I would lose 4 times as much. I know I could gain also 4 times as much, but the higher the volatility is, from my experience at least, the higher the chances are, because the market is really like moving in very irritating ways. Sometimes we see a lot of wicks to the upside and downsides when that you get stopped out unluckily, you know, make the right call, but you get stopped out just because of the intra-candle volatility, maybe I can call it.
Yes, I understand that. When you say your usual position size, do you mean the percentage of your risk capital?
Yeah. Yes.
You need to change, not the lot size, of course, just the percentage risk, right?
Yeah, exactly. I need to
I see
risk
that.
less capital per trade to come to
I
the same
understand that.
results by the end of the day.
Yeah, the thing is, volatility is also, you can see it as we can see it as a acceleration in price delivery, right? Whatever is going to happen is just happening in a short period of time, right? That's why we have expansion of the ranges, right? What's going to happen in a day and a half or maybe even two happens in one day, and you have those big ranges that don't fit the typical average range of a day, which is, is another way of looking at, there's more thing happening in the same amount of time. Meaning, if normally you would be able in your strategy, or in my, for example, if I were to lose, typically on a, not a bad day, but I mean a day where I have some losses. I don't necessarily call it a bad day because it's a usual day to me, but a losing day might mean to me I have like 6 losses not necessarily in a row, but 6 losses, maybe 7 losses. On a day of higher volatility, that can be easily double because you have more movement, more opportunity. We say opportunity, but there are chances to get into the market with the same kind of probabilities. But with my low win rate, it means that I will have more chance to get into the market, more signals, but my statistics don't necessarily change that much. So I will have, instead of 8 losses, could have like 14 losses, which sounds scary, but I'm risking very little.
Which translate into the same amount of money that is lost when in a case like this.
No, the thing is, because of I don't adjust in that sense. So I leave it on, because I find it, I haven't found a way yet to quantify by how much I should be adjusting it. And
that's the big problem. Yeah, it's an educated guess always. Yeah,
that's the thing. And maybe I should do something with it, but so far I'm leaving it as it is. And the thing is that I'm risking very, very little per trade. That even an expansion, not an expansion, but an increase in the volatility of my equity curve, which is what this causes, an increased volatility on my equity curve, is within comfortable zone for me, because I have dialed down the risk so much. So I started from the get-go. I adjusted, so universally, uniformly lower the risk to to accommodate this. But going back to, we're asking, how would I be approaching the market? Well, not different in the way I read price or look for the opportunities, the setups. It's exactly the same, because my way of doing it is, of course, reading price action. And price action in a volatility environment, high volatility environment, is basically the same as a low volatility environment. The only thing happens is the ranges, the velocity of things happening. The moves are exaggerated, but the an outside bar has the same meaning whether it's in a high volatility environment or a low volatility environment. Whatever is the fun, because it's a reflection, of course, of human psychology behind those, or of those traders, the collective psychology of the group of those participants. So if I'm looking at EU to answer your question concretely, what we see, of course, is a huge gap, right? People might think, okay, this gap needs to be closed. The thing is, yes, they typically have a high probability of being closed, but the thing is the timing. When will that happen? And unless you have a model and you have some data, it's my trade plan isn't based on trading those gaps, and I know they're going to be they have a high likelihood, but I don't use them in such a way. But what I see is, Monday came open with such a huge gap. It's not a typical day. That's one thing. So you better check your risk parameters well, and maybe even dial it down if you're not certain what to do and how to handle these kind of situation. But the other thing is, we are now in a demand zone, right? It sounds weird to be talking about demand while this is so bearish, gapping down everything, but it is what it is, right? This is technical analysis. We need to, put aside our emotions and read price as it is. Doesn't mean, not every demand zone will be respected, of course, but we are in a demand zone. This is a quasi, that's the neckline. We came back. The first possible entry order block on the daily time frame was not even, it gapped even lower than that. So it's not relevant. That this order block, not relevant at all. This is the order block that I would be looking into. The only problem I have with this is that it is below the weekly order block, which is this area. That is something that it's like something that is about to break. Normally a daily order block, an entry order block, we should be within the higher time frame, not below it, because that's a sign of weakness. So I would say, I think the probabilities of it working are less or lower than usual, but nonetheless it is there. There is an entry order block on the daily, so I will be looking for the lower time frames to see if I can get an entry there, an entry long. Yes, an entry long. Doesn't mean I'm going to go blindly at it, because so far the only thing we've gotten is a fresh order block on the H4, a bearish one, right? So it means that, and as you can see as well, right, the H4, both of them that we had, were invalidated by this close, meaning they're not there anymore. They shouldn't be, paid attention to. And we are forming bearish order block on the H4. So the timing is not there yet, but I'm still looking. Every time we come into a demand zone, automatically my next step is, do we get a sign on the H4 or some other sign on the hourlies that we might have a reversal, right, that I can use in my trading? And I don't see that yet. Not surprisingly, I mean, with that bearishness, it's going to take some time before things get to normality, if that's even going to happen today.
That's the thing. I think we are going to see the markets like this, not really wanting to go further much down or wanting to go up, talking about EU now, or
Yes.
the US dollar in general, until we see we're approaching the US opening later. So at around 9 a.m., 10 a.m. New York time, probably we are going to get a clearer direction there. And for sure, you'll see a lot of volatility during the open. So when the traders at the banks are starting to work, because you'll have a lot of corporate order flow as well, like large corporation calling, oh, we have to deal this or that. I think the treasury departments there are probably up already and working as well, because they were
sure
hit hard. Probably positive for them, because as I said earlier, international cash flow to the USA generally tends to be in US dollar. So when companies are importing goods, they will bill the importers, so the exporters of other countries, in US dollar, so they don't have the currency risk necessarily there.
I understand that, and I think many people who, not people, but I mean entities who participate in the economy in general will be scratching their heads. Do we need to make any adjustments on our policies, on the risk parameters? Because the market is going haywire. What are our risks? Probably when Trump came to office, they already asked that question, but days like this, they probably, if they didn't before, they are asking those questions now, right? Do we need to change something? Do we need to, I don't know, have more liquidity at hand, have more cash at hand, because things can get, weird, atypical. So and all those things, it takes a little while before everyone adjusts and accommodates to. So I think it's going to be not a typical day. It isn't already, but it's going to be different than usual for sure, going forward as well. I would expect, if anything, I see this H4 order block that is fresh. And on the H1, we did have an order block that was retested before. So we could be looking for a short opportunity here in this area, but it was invalid. That idea was invalidated by this close, which is up above that high. This would be the head of the reversal, the quasi, but that quasi was invalidated by this close high, this close above the previous high, right? This is the head, and this close invalidates the quasi, meaning if it is going to reverse, it needs to make another quasi, or maybe it's not going to reverse at all. And by reversal, I mean a reversal back into the H1 order block that was created, bearish one, for a continuation to the downside. The daily, I'm looking for a indication of a long, but that can take many many hours, maybe many days even. So and I need to trade what I see, not what I think, what I expect, what I see. And what we see is some bearishness based on the H4, with the H1 giving us an entry order block. Actually, there isn't any on the lower time frames. That would be the quasi, meaning with this, the left shoulder, the head, and a possible right shoulder being formed, but there's no entry order block on this leg, meaning from this point to this low, there hasn't been any indication of where the sellers are coming in and taking control. No order blocks, no entry order blocks. So I would be sitting on the sideline. And this is typical. I'm not surprised, because we have that gap, which works as a magnet. And it's if it's going to be closing that gap by any degree, it's unlikely, and it's not going to show not any but many like sellers pressure necessarily even on the lower time frames, because you have that impulsive move from the buyers and not so much from the sellers, if it is going to be closing that gap. So I'm going to be watching and waiting for price to show me its hand and then act. I haven't put on any positions yet. I'm just watching the market. How about you? Are you trading today?
Yeah, I did already do a trade in Bitcoin this morning. I just told earlier when I woke up and saw like, damn, we went all the way down to 93,000 or below 93,000 actually this morning, and we were trading around 94,000. I actually did a buy when I was having my breakfast, which I then sold at 96,000 again. But that one was really just based off a hunch, where I said, okay, I think we reversed exactly at the low again, at the prior low we had in the mid of January there. I think it's more likely that we see 98,000 today again than prices underneath 92,000. But this is a trade I would never openly propagate to do out there, because it's really just based on a feeling. So something I really, really don't do very often. Very rarely, I think, maybe like we're talking about one or two occasions. But this morning was something like this, made like $400 of it. So that's a nice start into the week, of course, with something like this. But in general, this is, and I think that's why it's for me so interesting to hear you talking about how to approach a market like this. It's an exercise in patience, in my opinion. So, and this is also like one of the main differences between somebody who is doing this as a profession, for example, you, and somebody who is just beginning with that. Because as a beginner trader, I can promise you, we were seeing a lot of beginner traders jumping into the market, for example, to trade this gap close trade. I had to smile a little bit just now when you said, yeah, gaps tend to close, but you don't know when they are closing. Sometimes you have to go through a lot of pain before they finally close. And we're talking about weeks and months of pain sometimes. There are more than enough examples for that as well. I also don't have any statistics on that. It's not the kind of trade I usually do. But like you said, you have to trade what you see. I mean, if you're not seeing anything at the moment, well, then don't trade. This is really the lesson here. You're not going to earn the money because you click a lot of times buy and sell every day, always remember you're always paying a fee commission. You always have to go through a spread, and the more you trade per day, the more that adds up. Also, so you have to wait really for this high profile chances and not just take the trade because you know you want to be in the market. You want to have maybe this adrenaline rush. Maybe you have the feeling you're missing out on something. You're not missing out on something. And what we saw also this last weekend, I said that earlier as well, this is like one point why I like cryptocurrency so much, because you don't have the gaps. Like this type of gap of like 90 or 100 pips, for example, we saw in euro dollar, and we're talking about the most liquid trading pair in the world here. You don't see that very often, but when it happens, I guarantee you there were a lot of accounts crashed this morning, in a margin call this morning. A lot of people got really hit by this on the fourth foot, because this is something that doesn't happen very often. But when it happens, it's very severe, because for whatever reason, most people are hit on the wrong side of the markets. It's very rare, also for myself, when something like this happens for me, that by accident I'm on the right side of a market. I have the right position that benefits from something like this. So yeah, it's really also what I only can say: be patient. The good thing is the market presents you with plenty of opportunities every day. If you miss a couple of them because you were just not sure, something was off, something wasn't looking right, well, then don't do it. Stick to what you know is good. And I think you're a prime example of how to do that with a lot of discipline, Victor.
Yeah, that's nice of you to say that. Well, yes, there's no other way to survive in the trading career if you're not patient, if you don't know when you're supposed to be doing something, right? I don't feel the rush of putting positions on because the market, did one thing or the other one, because that's not where my edge lies. It's not about running around clicking it. That's not how, at least that's not my experience. And I think I've been doing this not that long, but long enough to know that for sure. You said it. Patience is one of those qualities of a trader that will make it possible for you to survive, have longevity in this career.
Yeah.
And that's it. That's the key. It's about being calm. To me, at least, I know some traders, they thrive on being impulsive. We have some need to see it and they click it and they think afterwards. I haven't been able to make that work. Whenever I do that, I tend to dig a hole and be in drawdown instead of being profitable. So I learned the hard way that the only way to do it is to follow my strict plan, and I'll follow that. Whatever market condition is, high volatility, low volatility, I do have to adjust a little bit, but the rules don't change because of what I see or what I feel, how much the market has moved necessarily. I mean, automatically the ATR will move, and I will use that. But yes, I think the gap of today also talks about the over the weekend risk that it is something we traders we know about it, and it's not a secret, but I would guess that a lot of people are not taking it into consideration often enough. There is a huge risk, as you can see today. The market can gap down or up, can gap on its open on Monday, and you could be completely liquidated, losing everything, while your system could be profitable. It's just because you didn't identify and accommodate that risk in your plan, or at least maybe not adequately.
Exactly. This is what I meant. It's like one of those rare occasions where something like this happens, and a very high probability, because you haven't encountered something like this before, that it liquidates you because you couldn't accommodate for it. Yeah, it's kind of like exactly like the counterparty risk, like when your broker goes bankrupt, or when you had all your money with FTX or something like this. It's something that people do not expect, but when it happens, it's really, really severe. And if you lost money, guys out there this morning, or hopefully you didn't crash your account, but if you lost money, don't be too sad about it. Take it really as a lesson, because I can guarantee you, I hope at least, of course, I cannot look into your heads, but there's a good likelihood that something like this is probably not going to happen that soon to you as well. You'll probably remember that there is the possibility that something like this can happen. So maybe I shouldn't have too many open positions, too large open positions over the weekend. Maybe I should also think about, even if my position is rather small, if a gap is large enough, it's still going to cost me a lot of money. So accommodate for this. This is one of the reasons why I do not like to have spot forex positions and stock positions, at least when we're talking about swing trading, when we're talking about day trading, open over the weekend. For me also this morning, the first thing when I came to office, because I'm trading a lot of forex options, I had to readjust with spot trades my risk there as well, because I got hit not like super hard, but I had to do some hedges, to accommodate for the new situation. If I had, because there was not so much crazy volatility the last days, if I had much larger positions, I would have felt the hit very much this morning as well. But as I have gone through the years multiple times through a scenario like this, of course, it always sticks into the back of your head. Yeah, Whitfrog is saying it. I stopped holding positions over the weekend for reasons such as this. Absolutely. Victor, I have one very important personal question for myself. Sure. Are you allowing me to get a new coffee quickly?
No problem. No problem.
I'll be back in 5 minutes. And I will
be my
leave you in
pleasure.
the competent hands of Victor. See you.
No problem. See you. Yes, as we were talking, Dirk and I, it is important to quantify, and even if you can quantify, to identify where the risks are in your trading. It's very, very important. And one of the universal rules in investing, which also applies to trading, it applies to everything in life in general, right? Which is diversification, right? Not having all your eggs in one basket, right? And that you can apply that to your prop firm accounts. You can apply that to your private account, not having everything on one broker. You can apply that in on a basis of your risk per trade, right? Not having all the risk in just one asset, because if anything happens to that one position, it's going to make a huge difference and maybe make you lose your account. Diversification is an actual, we know about it. I'm sure you have heard that, don't put all your eggs in one basket, that phrase before. So do, apply it to your trading, not only on your within your account, but also on the whole of your trading business, right? You have to see it as a business. And that's one of the things, right? With the brokers, counterpart, maybe some people might be asking, what is a counterparty risk? And it's the risk that the other party, and in this case is between you and your broker, that the other party isn't able to comply with the agreement. The agreement is you put your money there, and when you want your money back, you will be able to withdraw it, right? And they have to comply with that agreement. They have to give you your money back. But there are times when brokers go they go down under, and they're unable to do so. That's counterparty risk. You're not able to get your money back. Well, that is something we have to live with. Of course, you can choose by having good prop firm, and if we move that to a prop firm industry, you have to choose in this case, not your broker as in a private account, but your prop firm account. Have you chosen a well established prop firm a company, right? Because that's the risk. Your counterparty risk is in that situation as well. You win, you make a lot of money or some money, but the prop firm goes under, and with your money. So that's the reason it's very important to choose your prop firm in advance on that criteria, not while you're already doing it, but in before you start choosing a reputable prop firm account like ours, right? We are one of the first one in the industry, a pioneer in the prop firm industry, and it's for a reason. And longevity tells you something about about us. So that's another way of risk management, right? Identifying the risk, counterparty risk, in this case, prop firm or brokers, and doing, everything you can to minimize that risk, because you don't want to be, a couple of years later and finding out, you lost a big chunk of your effort, time, and money because the prop firm you trusted went under. So, and in such a moment, uh, you know, safety above everything. So let's look at the market. Let me look at the chart. I mean the chat, to see if we have anything. There is a question here about Canada, the conflict, U.S. and Canada conflict. I think I should leave that to Dirk. Maybe Dirk has some ideas about this trade war, the tariffs, and so on. I'm not a huge fundamental guy, macro guy. Um, so I think Dirk would be the best person to answer that. I'm checking out the chat, of course. All right, let's look at dollar, euro dollar. Yes, as I said, let's look from the from the higher time frame. We have, of course, um, a quasi on the weekly and even on the daily time frame, but we have no entry order block on the weekly, right? So there's no demand era based on that quasi structure. And on the daily time frame, the quasi is this, for anyone who is wondering what I'm talking about. That's the quasi, the established downtrend. We didn't take it. We didn't take out. We haven't activated at this quasi, this reversal time pattern on the weekly time frame. But even if we did, we don't have any entry or block on the weekly time frame. So that tells you something. We don't have a reason to think on the weekly time frame we're going to have a reversal. Other than, of course, we have to the left, we have an area which has been, let's look at it. Let's take a look at it on the weekly time frame. It has been invalidated by this close. You see that? So this order block needs to be moved to the side because it's no longer valid. So this is the daily time frame, and we do have a quasi at play, as I said earlier. So I will be looking for reasons to go long, and one of the reasons would be a quasi on the lower time frame on the hourlies as well, or perhaps a bullish engulfing on the daily, right? So that could take a couple of bars before they present themselves. Today is Monday, um, the 3rd of February. It may take a couple of days before we have a bullish engulfing on the daily, which could be a reason for me to be looking for lower time frames to get those entry. But I will be looking. I'm already knowing that for this week, this is the area that I will be looking for possible signs of a reversal to go long. But in the meantime, you'll have to, we as traders, we need to go with the flow. Where's the flow? Where's the order flow? The order flow is, of course, so far has been bearish, right? We have the last order block that was created before the gap was already bearish, which is this is the H4. And I don't have that illusion that is going to be retested anytime soon. So it's not very relevant right now, but that was the last one. And this is the actual after the gap. This is the last order block that we have indicated. And that is the direction that I'm going to be taking trades, since I'm trading, for a session, sometimes the whole day, rarely holding up overnight. Usually it's for a couple of hours. And so far, the only order block that was created, the only direction type of structure has been created is a bearish one. So I have, even though on the daily I'm looking for something down the line, maybe tomorrow, maybe this week, today, right now, this moment, it's the bearish side that is winning the battle, so to speak. So I have no business looking for that long yet. That's something for later. Right now, it's a bearish H4, and going back to the H2, there's nothing here other than a bullish order block, right? But since we don't have the H4, I'm going to disregard this order block because we don't have the H4, right? The H4 between H2 and H4, we need to listen to H4, and so far the H4 is telling us it's going to, continue to go down until this structure breaks, which it hasn't happened yet. So this is the area that I'm looking for, and we could look for an entry and maybe even take a trade live with you guys. Don't forget to hit the like buttons if you like what we're doing here. I chose the wrong color, and we have Dirk with us today. Not today, back, I mean.
I'm back, and I'm going revitalized now with a fresh coffee here.
Yes.
Cheers.
There was a question about which I thought you would be better to answer, which is this one. Maybe you may have an idea, about what your opinion is.
I don't know. At the moment, I feel like we have like at least one of two people being like a young 4-year-old boy who doesn't get what he wants, screaming at another one. It's something I in my lifetime luckily haven't seen. Maybe people that were born earlier than me, maybe people that lived during harder times, Second World War and so on, were used to something like this. I hope this doesn't mean we are going to see a war or something in the beginning. I'm in general worried that the tone itself between politicians, between countries, the tone in those individual countries gets like harsher and harsher, and that you are able to say things now that were unthinkable just a couple of years ago. Still, I mean, I don't want to get too political, but when I saw, for example, what Elon Musk was doing there, during the inauguration, for me as a German, I was deeply shocked by it, really. So
what exactly are you referring
I'm
to?
referring to his Nazi gesture that he was doing there. And so if that is the general tone we are seeing on the political level soon as well, coming from America, we are in for a hard time for at least of trade wars. But I don't know. I don't have an educated guess on it, even because it's something I've never experienced before. Sorry. So as Victor said earlier, I also will have to trade what I see there. And at the moment, when we look at translate US and Canada conflict to the trading pair US dollar, Canadian dollar, I'm not doing any positioning there. Because I think especially that Forex trading pair is like the most sensible to touch at the moment.
I see that. Maybe we can do a technical analysis on this pair for those who do choose to trade it. But indeed, I will be cautious because of those news, unless you have data on your system, that goes many years, and where you've concluded that you don't look at the news because it hasn't has any effect for so many years, and why should it have it right now? But using logic, you should take it into account.
Yeah, the only thing really that I would always keep in the back of my mind is if you compare the economy of the USA and the economy of Canada, I think Canada's economy is as big as the economy of Texas. So we are talking about the US, of course, being the biggest economy in the world still, being multiple times as big as the Canadian economy. So you can kind of expect who is going to be the one in the position of power there. What that translates to, I don't want to make forecasts about that. I'm no politician. I have no background in political sciences and so on. I'm not an overly political person myself, although probably you have to be nowadays now. And so maybe keep that in the back of your head. I think this is also why we see this gap to the upside now.
Yes, I would think, what I see. Well, I'm not a political analyst either, but what I see is big egos at play. When I see leaders of different countries, being defiant against Trump, and I understand that they have to defend their face and their position, their political party, their voters by displaying a strong leader. That's what they were, why they were positioned there. um, but the reality is, they have very little chance in forcing Trump to do anything, really. I mean,
Yeah.
economically, Trump is, the USA. I mean, not Trump necessarily, but the USA is not very sensitive to these things because simply, as a trade partner, they're very much smaller than otherwise around, or the vice versa, right? So the decisions that US take have much larger impact on their economy than their decision would have on the US economy. And because of that fact, you don't have leverage. You don't have a
Yeah.
negotiating token. Trump or the USA has the negotiating token here, because if they decide this or that, it affects the other party much greater than the other way around. So if you only see that, then you already know where it's likely to end up, right? If Trump insists, he will get most, if not all, of what he wants.
Yeah, that's funny that you mention egos. Exactly what Jonathan and I were talking about earlier. Like what differentiates a politician from a trader. Traders, at least the ones that I know that are successful, they don't usually have big egos. They're usually very humble and are grateful when the market does what they were expecting. But they don't translate that to the market did this because they are so great in their decision making. They are the wizards of the market, so to say, and this is like on the other hand, you have a politician who very often, of course, has to stick to his opinion because otherwise she will appear weak in the eye of the public. Very easy end up in a situation like, yeah, but he said this the other day. Now he's this opinion. How come he changes his opinion so quickly? He must be a weak person, which of course is not right. Changing your opinion based on the fact, on the contrary, is a sign of intelligence, in my opinion, at least. But yeah, there are other things in the playbooks of politicians, probably a lot of things also I have no idea about, to be honest.
Well, yes, being a flip flop, as they would call it in the States, is not a
Flip-flop,
good
nice.
thing. Yeah, flip flop.
Yeah, that's a good expression. Yeah.
Being a flip flop is not a good thing. It's something they criticize you on. But being flexible is actually, wisely flexible, not indecisive, but wisely flexible with your opinions and your stand is actually, I would say, a wise thing as well, because things change and you can be wrong. Being stubborn isn't wise.
Yeah.
And you said something about the traders, successful traders having not much of an ego. Actually, to me, that's a red flag in my own journals. When I
Yeah.
get too confident, when I start thinking I'm going to be making this return this week, or because I can push it a little further, those are the red flags to me.
Absolutely. I couldn't agree more.
Yeah.
The times where you become overconfident, it's just a matter of time until the market,
Exactly.
bang, you get one left and right onto your head from the market.
Exactly.
Are you looking here for a short entry now?
I'm looking at it. I don't like the fact that the 5 minute doesn't have any entry order blocks, right? I want to have, even with the quasis being formed, I want to have confluence in different time frame, and I don't have it on the 5 minute. I would like to have the 5 minute to stand on his shoulder. I don't have that right now. The 3 minute has an entry order block on, but I don't like it, and that's why I didn't put it in, because it's above the area that I'm interested in. Right?
May I
leave it
ask
done.
what you define here as an entry order block? Is this outside bar up there?
The engulfing. It's the engulfing.
Oh, it's an engulfing pattern even, yeah. Okay.
Perfect. Good question. I use my order blocks. Very simple. They are either engulfings or outside bars, and I can show you what I use for. Engulfings are this for everyone in the audience. Let me close this.
But this is also not like a perfect engulfing pattern, yeah?
You would like
to have the open a little bit higher, no? And over the open of the last candle? Or?
The open of the last candle. Say that again.
So wouldn't the open of a red candle need to
Yes.
be a bit higher than the open of a green candle? The close of a green candle, sorry.
Not necessarily. It doesn't have. I mean, I see what you mean. To encompass or to engulf
Yeah.
the body perfectly. It's not covering, if you will, the earlier bar. No, we can have in trading, you can have different variation of different patterns, right? It depends on how you define that. But the way I define it is as simple as possible. It's this. This is actually an outside bar. And I will maybe I should explain it a little bit. So my order blocks are right. I'm gonna type it in. They are my OBs are engulfings and or outside bars. And outside bars, of course, the uh, the abbreviation is also OB, but it's I'll explain. I've write it out so it doesn't confuse people. So it's either engulfings or outside bars, and engulfings are where you have a change in color, and that's of course if you have colors put in the settings of your chart. But you have an up down. If you have the first bar is an up bar, then the second one needs to be a down bar, right? A bearish one.
Yeah.
So it needs to change direction. That's one condition. It needs to change direction to be an engulfing. And the close of bar number 2, in the case of a bearish one, needs to be below the open of bar number 1. Regardless of where they open, where the second bar, this maybe I should mark them. This is the first bar. If only TradingView cooperates a little bit.
Yeah, the text utility there's always a bit flimsy, huh?
Yeah, sometimes it does what it wants. It has its own opinion on things. This is bar number 1 and bar number 2. It's a 2-bar pattern. And the close on the second bar needs to be, in the case of a bearish one, it needs to be below the open of bar number 1. That's it. And it needs to change direction. If you have that, by definition, at least in my book, you have an engulfing. Because automatically it means that the body of bar number 2 is covering, in this case, not perfectly, but it is covering the bar number 1. And the idea behind it is because the body is the representation of the net effect of the participants, right? The net effect in this bar is that they push price from 0.252.2 to 0.253.5, and that's the net effect on within that whatever 3 minute this is, and the second bar does the same. So it means that the sellers, they took control because their net effect negated or surpassed the net effect of the previous bar, which was a bullish bar, of course. So that's one definition, or that's one of the combination that I use. And in this case, this is the range of bar number 1, right? That's the open, and this is the high. The open turns out to be the low as well. The low and the high, both of them were taken out by bar number 2, right? So it's called an outside bar because it goes, bar number 2 goes outside the range of bar number 1. That's one thing, and it closes below that range, or in this case below because it's bearish. But if it were to close above, it would be a bullish outside bar. Those two things are the outside bars. I mean the order blocks, and I have different kinds of order blocks: fresh one, parts of quasis, entries, and so on. But I will explain that another time. But that's basically the order block that I use, and it's very simple, very very simple. No, not using any other thing other than just the and I mark them using the highest point of them too. In this case, because it's a bearish one, and the open of bar number 1. So that's on the 3 minute. There is an order block here, right? That's an area where sellers to control previously, and I have an idea that they are likely to come back to the market. They have some increased probability of coming back because that there was something there that caused them to move price, to sell price, and that which caused that has a greater than how do you say that, greater than randomly to be expected chance of coming back and causing them to sell it again. That is one way of seeing it. There's also the other thing is, if they found that level to be a great selling price, right level, next time it comes back to that area, they're likely to have, psychologically the same idea. If it was attractive to them to sell them at that level, when price comes back, they're likely to find, have the same idea. It's still attractive, so I'm going to sell it again. I have a second chance to selling it, and that's why we see those structures. For example, here on the 1 minute, we can see how the order block works. Price, right? The sellers, they took control there. They push price in between those two bars, creating that outside bar or OB. Price comes back to them, right? And as price comes back, what does it do? It gets sold again. And that's exactly the idea behind those order blocks, right? Price react to them. Doesn't mean it's going to go all the way and never come back, but it has an impact, or it has an effect. And that effect we try to capitalize on in this trading strategy.
So if I understand you correctly, what you ideally would wait now for is for the price to come back to that order block you were defining before, when I asked you on the 3-minute charts, and form like an outside bar or an engulfing pattern again, or is it enough to touch that zone for you?
No, actually, I've tested extensively, and I call that blind entry, right? Where you don't wait for a confirmation. Blind entries, they're very, I couldn't make it profitable. Maybe there is an edge, but maybe my approach wasn't able to extract that edge. So I need to have some kind of a confirmation, because if price is indeed going to change direction, you can see it here. You can see it here. If price is going to, let's go to the 1 minute actually. If price is going to change direction to this structure, and I call it structure, it's the order block. If price is going to change direction there, how does price move? Like fundamentally, like philosophically, how does price move? It moves by taking control one side or the other. So and by taking control, I'm using the same terms again that I was using for the engulfing and outside buy. So it's going to create engulfings again. See that one? And another one here. Actually, it's this one. How the bearish bar takes control and engulfs the bullish one. So if it is going to, and that's how I trade. If price is going to do what I'm expecting to do based on the on historical price, then it needs to behave like it when it gets to that relevant area. So there's a behavior price needs to show, and that's my confirmation. I need to see certain things as price comes back to this area. I need to see if price is going to reject this and go lower, it needs to show me. It needs to create certain patterns.
So you would like to see the bearish outside bar, bearish engulfing pattern again, and that would be the trigger for you to then say, okay, price is going to be rejected, but once again, I should, in this case, enter on the 3-minute chart, I think it was enter short.
Exactly. Yes. That is exactly right. I need to see, and you can use pin bars, which is also a sign of selling pressure or pressure on depending on the direction. You can use outside bars, engulfings. You can use other things, but I use those two engulfings and outside bars. That's one thing, but it doesn't work all the time. So you need to be selective when to use it. And there are other things that I apply to before I enter. It's not just an engulfing here and I go in. I need to see other things as well. I need to see, for example, confluence in in time frame. Alignment, I call it.
That would have been my next question. If you look, for example, now, let's say at the 4-hour or daily, like if you see like an engulfing pattern at the daily, bearish one, for example, you say like, oh, I just want on the lower time frames to trade into the same direction, for example.
Yes, actually, that's a very good question. There is an engulfing here, and it is an OB. But I have, for example, one of the things that I do is I've noticed that it depends on how, and I call this fresh, how recent the structure was created.
Yeah.
Is a factor. So the more recent it was created, the more the better
Value it has,
the more value it has.
This is something I look at like different. I do that with indicators, but on my short-term trades, I also do that. If the signal is like very long ago, the longer the signal is there, the weaker it gets over time, especially on the lower time frames, in my opinion.
Yes, that's perfectly correct. And that's why I call it fresh. If it's not fresh, I'm not gonna trade it. Price will still react to it, but I'm not touching it, because I know that that's not where I have my highest probability of finding, the correct structure that is going to move price the other direction. So in this case, this is not a fresh order block, right? Because we have, well, you can define the freshness of your order block differently, but my definition is I'm specifically not saying the very value that I use, because I want to encourage people to do their own back testing and not rely on things that I say or other people say, because I think that's, there's a lot of value in finding and making it your own. But in this case, this is the engulfing that created that order block. And we have, how many do we have? I'm not going to count them. I'm going to just use that tool. We are today on bar number 13. And that's not a mid-single digit number of bars since its creation, right? It's 13 bar. That's 2-digit. So that's not a fresh order block. So I'm not going to be trading it based on the fact that it is fresh, because it isn't, right? But I am interested in this order block because it has the quasi, which is the established downtrend, breaks the neckline and comes back to a relevant area above the beyond the 50% retracement. So I use the 50%. Anything here within certain rules, of course, price tends to react to, right? Not all the time. It's not a guarantee. But if it is going to react and do a reversal, it's going to likely do it using these structures. And the first one was irrelevant to the market. So that one already, I can delete it. I like to leave it there to see, it tells me something. It came into a demand area, an area that was supposed to be demand, and it didn't flinch. Right? That tells me something. That is very bearish, in reading price action. And then now it comes to the second one. That's a reason, because I call that an entry order block, not just a regular order block, but it's an entry order block based on the quasi. So this is a reason for me to look for an entry, but this is only the daily. It's not enough. If I only have the daily, there is edge there, but it's very little. I want to have alignment, so I would be looking for other time frames. Go to the H4 and have the H4 convince me that this is an area to enter. And so far, we don't have any indication that this is reversing on the H4. And so I park that idea of a daily bullish signal. I park that for tomorrow or until the H4 give me that sign. And in the meantime, I see a bearish structure on the H4, meaning an H4 order block, which is still fresh. Remember, this is just the next candle, so it is fresh by definition. So I'm interested in shorting this structure, right? And I let go of that daily idea of where I'm going to be looking for a long, right? We're not politicians. We're not supposed to be being stubbornly fixated on our promises in our campaign. No, we are flexible, and we're reading what price is telling us, and that's what we need to be doing. And prices. So this is the H4, so I want to be shorting it. I want to be short that as long as it doesn't, show me otherwise. But that's only the H4. It's not enough. I need alignment. So I go to the H2. There's nothing here that makes me want to short it. And on the H1, I do find an H1 order block right here, right? And it's still fresh. So I'm basically trading fresh H4 within, I'm sorry, a fresh H1 within a fresh H4. And that's the alignment that I need. But that's
it's nice.
still
And
not
then you
enough.
can go down the time frames really to kind of pick your entry timing. No, it's
Exactly.
very interesting way of trading, I must say. Thank you for the insights. I'm sure in the future you'll get many more questions from me. It's for me always so fascinating, you know, when you see kind of another way how people look at the market. I mean, by the end of the day, it always, in my opinion, at least translates back to support and resistance, and a different way of looking at it, which makes sense, of course. Everything is about supply and demand, support and resistance, but how to identify things like this. Very interesting. Thank you for your insights. And I'm just seeing we've already hit the 2-hour mark here. So our live stream here has to slowly come to an end. Yeah, as I said, thank you guys for having me. Thank you for joining me here today, Victor. It was a pleasure having you on. As I said, I'm looking forward to many more live streams with you and learning from your insights. And yeah, guys, please also leave us a like, subscribe to the channel, and leave us a comment. That always helps the algorithm greatly, you know, to attract also new viewers, which we're here, of course, for. And going to see, at least I'm going to see you guys again next Monday. As Jonathan said this morning, we have a lot more in stock for you guys today, every day from now on, starting at, what is this, 9:30 GMT. I don't know, is somebody taking over now, Victor? Do you know that? Or are we just going to go offline?
No, I'm staying.
You're staying? Very good.
Yes. With the stream will be continuous
That
from
is so
9:30 GMT
good.
all the way to the end of our usual time, which is 3 p.m. GMT, of course.
So you heard it, guys. You are going to have basically half of a day coverage by real traders showing you how it's done. All righty, good. Then I'm going to leave you to it. I'm going to see you again very soon. Take care, everybody, and bye-bye.
Thank you, Dirk, for your time and all your insights. We really appreciate it, and we're happy
thank you.
For your time here. We see you next time again.
Yeah, like Jonathan said, don't press end stream, please. But you're taking over now. Bye, guys.
All right. So let me adjust the screens, perhaps with. Yeah, I think this could be better. Maybe we will have to think up some other ways to do it. I mean, the interface, that is. We have people being grateful for Dirk, yes, and appreciative for his time and his. He always have these great insights that I pay extra attention to. I mean, I'm watching the streams as well in the background as much as I can, but when Dirk talks, and you know, he has some great information, great insights, I pay extra attention, and it's for a reason. He's a veteran among us in the industry, so it pays to pay attention to people who have a lot to offer, like Dirk has. All right, so if you guys have any questions on what I just explained on the order block, engulfings, outside bars, quasis, what have you not, just ask me in the chat. I'm all ears. But let's not forget to hit the like buttons if you enjoy what you're seeing, and if you want to see us more, bringing value to you. It's all for your benefit, for your growth as the trader, because that's how we benefit as well, right? Our interest is in you being a better trader, because if you profit, we as a prop firm, we profit as well. There's that profit split, so our interest is aligned with yours, and that's how it should be. All right, so let's look at, Shabir is asking, do I only trade the euro dollar? Well, no, I trade the pound dollar as well. And from time to time, I may take trades in other pairs. But those two are my bread and butter, as they call it. Those two are the pairs that I go to. And they give me plenty of opportunities with, that goes with my personality. Sometimes it a couple of hours can go by and there's no signal, but that's how I trade best, where it's not too many all the time. So I take an average of about it is about three on average, but not every day. Three signals per pair. So about five to six in a day, but it's not an average that's always like that. Like a ticking clock, sometimes I have 15 in a day, other days I have one or none, and it comes to an average of about six, three on euro dollar to be specific. All right. There's a question here. I like it, guys. Everyone asking those questions. I like that. Alicia Molina is asking, what does quasi mean? That's a great question. A quasi is the following. It's an entry, it's a reversal pattern, right? It tells you that the market has a higher likelihood to reverse. And it is a variance of the head and shoulder, right? The head and shoulder, the textbook, all symmetrical, is something like this, right? You've seen this in the market very often, where it forms a structure that is which has a peak in the middle, and on both sides it has like similar peaks, lower peaks, right? That's the head and shoulder. That's the typical, very popular, very effective reversal pattern that you see on all time frames. And the quasi is it's a variation of this head and shoulder pattern. And it's called quasi because it's referring to that character in that fictional novel from the Hunchback of Notre Dame, right? The Quasimodo, right? And because that figure, that fictional character, was asymmetrical. We as humans, we are roughly symmetrical. I say roughly because, if you really precisely measure our, symmetry, you will see that we're still asymmetrical, but in a very minute way. In general, we are symmetrical, but this character wasn't, of course, right? It had a hunchback, it had a shoulder higher than the other one, and that's why they call them Quasimodo. And this pattern make us remember, or reminds us of that character, because in a normal head and shoulder, you have roughly there are different ways to look at. Some people look at the tops and to look at symmetry like there. I like to see the basis of those the shoulders to be roughly the same, right, for a head and shoulder. And the quasi isn't like that, right? It isn't symmetrical at all, and actually it's very asymmetrical, and it can have many many shapes, and it still would be a quasi, while this wouldn't be a head and shoulder, but it is a quasi because it does have and I'll tell you guys what you need to have for a quasi very quickly. Right, it can even have something like this, and it's still a quasi. As you can see, it's very versatile in the different shapes it can have. The quasi is the following. How do you recognize a quasi? First thing is you need to have an established uptrend. Well, uptrend for a bearish quasi, that is, right? And an established uptrend is defined as the higher highs, higher lows. Very simple, right? As soon as you have that, you will identify the neckline, right? The neckline being the last place, right? Assuming you have this, the neckline will be the last structure, swing low, before that head, right? This being the head. This being the head, and this would be the left shoulder, presumed left shoulder in that case, right? And the price needs to take out that neckline and come back for a right shoulder, right? And it is that right shoulder that I try to catch all the time, right? And I filter it, and you'll see how I trade it. Not going to go into the details exactly how I do it, not right here, but if you follow our stream, you will notice that I talk about this all the time. So, and you can ask this in the chat as well, and I'll go into more details. And so this is the quasi, where I try to catch the formation of that right shoulder, and I try to catch my entry on something like this. That's not the correct direction. And either you put it above the head, the right shoulder above the head. That's personal preference. And either you target the low of that structure or some other structure. That is, of course, to something you need to find out with your data, with your type of entries and your risk reward ratios, things like that. But the basic idea is that I take the reversal and I try to catch that formation of that right shoulder on its way down to some lower level. That's basically it. So it's a reversal pattern, a variance of the head and shoulder, and that's it's a very beautiful pattern because it helps me to maintain patience, because it really does need to make a number of things before it actually forms. And I know exactly where I want to be entering, so I don't get FOMO or anything before my actually signal comes on. It helps me a lot by having a structural way to approach the market. All right, let's look at the chat. Someone asking what happened to to the US dollar overnight. Well, Trump happened. That's the short answer. Yes, it is indeed the Trump's ideas about they say picking fights with other countries, but trying to implement tariffs impose, I should say, against them, so that they comply with how Trump's want his foreign policy to be shaped. Alicia, no problem. That's why we are here, to help you guys, become better traders and become profitable if you're not already so. All right, so let's go to the lower time frames and look at that. We can visit this later on, before it actually, we can come back. I would want to, analyze gold and Bitcoin a little bit, because they have been moving a lot as well. Actually, gold hasn't, but there's a lot of market movement, so it's good to look for gold, perhaps pound as well. So we have on EU, we do have that alignment in those order blocks. And if we go to the lower time frames, there are no entry order blocks on the 5 minute. Okay, there is, so that's a reason why I'm a little bit cautious, because there's not a lot of alignment on the lower time frame. There's no 5 minute entry order block here. And if you go to the 3 minute, there is one, and that was what I was discussing with Dirk. There is one, but I don't like the fact that it is outside of the area of interest based on the hourlies, right? This order block should be within, not outside. That's a reason for me not to take it, because I want it to be within the entry, the area of interest, which it isn't. So I normally don't mark that. On the 3 minute, on the 2 minute, there's also one here. As you can see, I didn't mark it for the same reason. I don't want to be taking that trade. Sometimes it is what price uses to move back, but I simply don't use them. However, this one on the 1 minute, there is an area here that is interesting, and I would be looking for how price reacts to this, to take an entry short or not. As it gets there, maybe see if price action tells us it's going to reverse, because we do have the H4, the H1, and in this case, the 1 minute, not the 5 minute. You would want that to happen on multiple time frames as well. Let me eliminate this. Let me see if I can change it like that. Yes. Okay, so all right, so this is euro dollar. Let's look at pound dollar. Let's do a quick analysis to see if we have anything. And we can look at dollar CAD as well, because I know we have a couple of people in the audience who wanted us to look at dollar CAD, or actually looking to perhaps trade it. We're wondering if they should or not. Well, on the weekly time frame, we have a nice fresh order block which hasn't been retested yet. But we're not there, so it's not relevant right now. And on the daily time frame, we don't have a quasi. The neckline is all the way here, so it hasn't activated the quasi yet. You can't speak of a quasi unless the neckline has been broken. So we don't have anything in terms of a quasi. What we do have is, of course, this gap from this close to this open. That's quite a large sized gap of about 80 pips on GU, that is. And we have a fresh order block, which is, this is the 7th bar since its creation. It's up to you if that definition defines or not a valid entry order block. However, in my experience, when we have wicks that goes way lower, I prefer them to hit another structure, and I would be using the other structure as the area of interest, right? Typically, if it still aligns perfectly well, then I will take it. But usually when price creates these candles that are violating the entry or the fresh order block by so much, it's a sign that there's a lot of weakness, or in this case, it is weakness in the market. All right, so I don't have anything here. The order block below us wouldn't be fresh, right, anymore, since that's even longer since its creation. So basically, on the daily time frame, I don't have any possible signals coming up. The only thing we have here is, of course, a H4 order block that could be retested, and if it does so, maybe we can mark this up. There are no entry, no alignment on the 1 minute. Perhaps we do have some alignment, which is this. As you can see, very simple. Keep it simple. You don't have to complicate things to be profitable. On the 1 hour, right? So we have alignment on 2 areas, and these 2 areas are basically my areas of interest, as I pointed out on EU as well, right? So when price gets to this area, I get activated, and I will. This is how I trade all the time, and I'll put an alert here, right there. See that? And it creates an alert. Every time price comes near this area, I'll get an alert, and I'll go look on the lower time frame to see if we have a reason to go long. And we can do some homework before, or preemptive homework, some preparation before price gets to that area. We can look for those quasis on the lower time frames. Now, let me get to see this low is 24.9, and this one is 24.6. So basically, this is 24.4. Okay, 24.94, I should say. So this would be the head, right? That point. You can have different rules as long as you apply them consistently. It doesn't really matter if you have a slightly different rule. This will become then the neckline. And this is live trading, guys. Live trading. We mark that up, and that gives us no entry order block here. I did have an entry here, so I'll be interested in that order block. Okay, and nothing else. There is one here, but it's whether or not you're allowed to take that trade or not. In this case, I would consider it, because it has a valid quasi as well. Even though I didn't mark it, there is a valid quasi in here as well. This will be the neckline. I chose to choose the latter one, but there is a quasi in there as well. So these are the 2 areas on the 5 minute that I'll be interested in watching. Other than that, on the 3 minute, I don't see anything, I think. Let me see. There is an entry in here. All right. That is on the 3 minute. But I see already that it's not valid. All right. It has there's too many of them, so that's a reason for me not to consider it. All right, so I'm not going to go to the even lower time frame, but that's where I want to be going long if this comes my way, comes to that structure. And if I do so, the target I would have would be initially just this high. Whatever high it hits, it creates before that entry. Right, that would be my initial TP. Right, so as you can see, it's a day trade. It's only to the next level, and I don't have a daily reason to hold this longer. And the H4 does give me a higher target. Let me mark that. The higher target based on the H4 would be 114 pips, but that is, we need more convincing from the 114 pips. So it gives me, this is based on the volatility of the H4, 2403 more or less. It's not precise in this case. That would be the TP based on the volatility of the H4, right? But I would be taking, that's the FTA to me, or not the FTA, that's the top of the structure, right? So that makes sense to me to take my TP there. And this, as you can see, this would be not a huge trade in terms of risk reward that I want to be taking. But let's say you do get an entry roughly here, and you target this. Well, it's still 4.1 if indeed it presents itself. But that's an idea. We can look at it later on. Let's look on the chat to see if we have some questions here. All right. FTA. Someone asked, what is FTA? And that's what I just mentioned. Yes, FTA it's the first trouble area, right? FTA, first trouble area. It means the first thing that price will come into after your entry. Once you get in, what's the first resistance or the first barrier it will encounter, right? Under relevant time frame, that is, right? And typically I want, and that's a great advice, you want to be taking either the whole position off or a portion of it on your first FTA, on your FTA, your first trouble area, because that has the highest win rate. And you want to, win rate is, it will automatically mean that you will not have large risk reward ratios, but it will keep your win rate high. And that's a the combination of those two is necessary for a profitable system. Taking your profit at FTA partials or the whole profit is a good way to start, good way to trade, I should say. All right, indeed, first trouble area, it's a common principle used. I'm not sure who coined it, but I know Trader Dante has uses that, and that's from him that I caught. I'm using it because of him. That's his terms, I suppose. I'm not sure if he coined it or not, but first trouble area. All right, let's look at the dollar CAD. Since we have, this is Oanda, yes. Let's look at the daily. Actually, let's look at the weekly, right? Do have a reason for anything here. We do have a very nice previous high here that it has been taken out today, right? Let me mark that with a weekly. There. All right, so that's a very nice highest previous high that was taken out. What else do we see? We don't have any. Well, we do have some structures way back up to about 20 years ago. Maybe we should do some. I typically don't use the monthly for these, for the live streams, but I don't see anything from the left. Actually, we have a very nice top here. Double top now is, possible triple top, or is it going to be broken? Who knows? That's to the left, there isn't anything, as you can see. We can see some quasis. I would be able to identify them. However, it's a second. Yeah, there is a quasi here actually. I know it goes way against the the sentiment of today, considering that everyone is expecting for dollar strength to continue to do so in weeks and perhaps months going forward. But this is what the price action is telling me. There is a quasi here, and we do have an entry order block on that quasi. This is the second time around this order block is being retested, so it's an already mitigated order block, meaning it has less chance of working out. But this is a supply area. It has been a supply area in the past, and it's likely to offer some kind of bearish pressure. But look at the price action as we are within that order block. This time around, it seems to have no issue continue to go higher and even violating this high. So let's look at the weekly. We are in a weekly and a monthly order block. I mean quasi. I don't see anything that is still valid. We did have a quasi here, but it has been invalidated already. As long as we keep above this line, these two lines, one is the monthly, the other one is the weekly previous high. It's clear who is in control, the buyers, of course. There isn't anything else I can say about this based on those time frames. We do have a fresh order block here, which could be something to, if we have a retracement into it, that could be a great area to be going long. Other than that, I don't see anything else. There is a consolidation area. It looks very, very bullish from this point of view. There are no. It breaks. There was a reversal pattern, a very a tiny reversal pattern in here. This being the head, the left shoulder, but as you can see, it gapped up, crushing that reversal pattern at all. So it's very, very bullish, and it's not leaving any. There are no, let me see, this is the lowest 92 and this one is 93. Yeah, there isn't anything here to trade, like structures that I could be using on the daily. There is a weekly, but nothing on the daily. There was an area here that was nicely respected from the past. All right, what else do we see? It looks, as long as it's above these lines, and it is right now, at least above one, it just oozes bullishness, because that's the line in the sand for both sides to conclude who is in control. And clearly it's borderline there, but as long as it holds there and closes above that line, we should continue to see price maintaining that area. On the H4, I have no structure. No structure. Yeah. No reversal patterns. The H2, we do have something, but it's already been retested, which is this order block. I don't want to be shorting this. Even if I saw it and in time, I wouldn't be wanting to short this, because you're above those previous high that is, this is a possibility of a break and retest. It broke those previous high, and yes, it did create an H2, but the H4, the daily, nothing is supporting this idea to go short yet. So I would be very cautious to pick a top there. And there's, on the lower time frames, on the H1, there's not really a sign of any reversal. This could just be retracing back into some flipped resistance level, which now becomes a support or possible support area. So on the dollar CAD, personally, I don't see a lot of opportunities, to be honest. There is a quasi here, and it's this area, but it's not visible on the other time frames. On the H4, well, there is an order block here, but
Yeah, that would be forcing it, I would say, because um, it's still fresh. Technically, you could take it, um, but is it going to reach that? I don't think so. Not while still being fresh. So I don't see any opportunities here. There is an area here that I could enter based on the quasi that I see up here. Right, this would be the quasi, the established downtrend. The neckline, it breaks out and comes back for that area for a possible continuation. That's the only setup that I see. But it looks, we'll have to see if it holds or not this high, and otherwise we could be looking for a long from these demand areas. All right. Other than that, I especially because of the fundamental, the news, you need to be extra careful with this pair, since it is one of those neighbors that Trump is having a trade conflict with. So it can have moves like it just had over the weekend, gaps, which are very dangerous if you have open positions, of course. Okay, the let's look at the one question here. It's going up slowly without a wick on the monthly this time. Let's look at what um, Henry is saying. Are you referring uh, to the dollar CAD, where you have wicks, and this time around it's not leaving wicks behind as it closes those bars? You're totally right. That's a change of character, right? There are many different change of characters possible, not only in market structure, but also the forms or the shapes of the candles. If you would excuse me 1 second. Yeah, so there's different ways to show different change of characters. That's one of them, right? The size of the candles as well. That's something as well. If it's been doing something at a certain size, be it small, be it large, and on the second or the third or the next time it does it differently, that's a change of character. And it's up to you, of course, to build a case. What does it mean? Does it mean it's going to continue or not? In this case, of course, a wick would mean resistance, right? Selling pressure coming in that creates that wick. Before that candle closes, it leaves the wick behind, meaning selling pressure in this case would be what would cause a wick, and it's not doing that, meaning there's less selling, meaning it's more bullish, right? That's another sign. The other thing is, look at how fast, this is the time it created the order block. Look at how many bars it um it it took it spent within that order block. It spent three bars, right? This is the monthly. It doesn't matter what time frame it is. It spent three bars in it before it was sold much lower. This time around, although it has been retesting for some time, this time around that it is pushing deeper into that order block, it has already, this is the fifth bar, right? That's a change in character. It's spending more time in it, meaning sellers are not coming to sell the market, meaning perhaps they may not come at all, right? That's the idea, how you build a narrative of what price is telling us. All right, so that's dollar CAD, and we didn't get any alerts on EU or GU. So I suppose price didn't come to that area. And yes, that's correct. That's the alert. It hasn't been tested or hasn't been triggered. Let's look at EU again. What has happened? We are in that area, and price did have a reaction, but this looks very bullish, right? Even though it has a huge wick, right? To create that wick means that sellers came to the market, right? However, the fact that it creates this means that they're kind of weak because they allow price to go way further than that order block. That's not how we want to see order blocks work. We want to see them as soon as market comes into that area. We want the sellers to take the overhand, and to for price to make this high tells us that for a portion of that candle, the sellers did not have the overhand, meaning it's a sign of weakness. If they were to have the overhand, they wouldn't allow this wick to happen. So for, and also on the 3 minute, but this of course was on the 1 minute, it's been already invalidated. See that close above that order block? I consider that invalidation, and I don't trade that anymore. Right, there is an order block here, but as I discussed earlier, I find that to be an inferior order block to be trading from, because of the fact that it doesn't have alignment like the other ones, alignment with the hourlies. So to me, I simply don't trade that order block. And I would assume, although I'm not going to do anything with that assumption, I'm going to assume that the quasi that I'm looking at is going to break, and price is going to, it's not going to stop price, and price is going to go higher. Whether it's going to do that from this point or from a lower point doesn't matter, but it tells me that it's likely to, keep on going higher, at least based on the fact that it broke the quasi, right? The quasi is there for a reason. It's to allow price to use it to make the reversal. So if it breaks it, it means that price is likely not going to be using the quasi, because there isn't a quasi there anymore. If it's going to use it, it needs to create another one. But usually if it's breaking, the same as with structures, if it's breaking bearish structures, it means that it wants to go much higher. That's the way it does it. There's no other way for it to go higher if it doesn't break those structures that are impeding it from going higher. All right, so EU is breaking structure, in my opinion, right? Breaking the reversal pattern that was able to hold it, and that means that we're probably going to see price going higher, unless we have some other price action that starts, flipping back, maybe at New York Open. Things can happen, of course. Let me see if there's something that we could still trade. The quasi in this time frame is here. So it could form another quasi. It happens many times. It creates all the time quasis, and not all of them are used or, yeah. So this is the 5 minute, and we just follow price. But as long as it keeps on breaking, it's likely to go up. There isn't anything to do. On pound, let's look at pound. And we have someone asking Aussie dollar as well. We'll take a look at it for sure. This is the pound, the H4. We did have an entry. We have an area here of interest, and we did identify two H1 structures that can be used, anytime now for price to continue higher, come back and mitigate. Right, there is an order block here as well. You guys see that? There's an order block, but because it doesn't have alignment, I ignore it. Right, that's something you start to appreciate or to identify with data and with experience, because not all order blocks are created equal. They're not all the same. To finding that nuance between which ones should I be trading and which ones shouldn't I. So it's the only way to do that is through data, in my opinion. Measure, identify the characteristics of the order block according to your rules, and measure them out. Measure 100 of those, and then compare that to another set of characteristics of the order blocks. It can be creative. It can be anything, and you build that database. And in a certain moment, you will understand, you will start to see certain patterns in your data, where you see that certain characteristics of the order blocks are likely, make it more likely for it to function, or to, reverse price. Price will react to them more likely based on those characteristics, by the presence of certain characteristics. And that's how you build your edge. As simple as that. Although it may sound simple, it's not that simple because it takes time to do it, but it doesn't have to be complex. Okay, on GU there isn't anything. It hasn't come back to that area of interest, so there's nothing really to do in between. Let's go to Aussie dollar. Remember, everyone, do not forget to hit the like button. We are doing all of this for you. For you, yes, you who is watching us at home, at your workplace, or wherever you may be. We're doing this for you, the trader in you. We want to lift that trader up, improve it, and make it the best trader it can, right? So you can come back and hit those buying those prop firm accounts with us, passing those challenges and getting your payouts. Isn't that what you want, right? Reaching those targets as a trader. So if you enjoy our live stream, hit the like button, subscribe to our channel, and do come often so you profit from everything we share here. There's also a Discord community where we have sessions, live sessions, workshops, where we talk about these topics, concepts, and everything in between. What it is to be how it is to be a trader, how you should approach it, how you should deal with losses, everything that is related to being a trader. We discuss them in our workshops on every weekday. We have a session, and the only way to come to be part of our community, it doesn't take a lot. Just have to have an account with the 5ers, right? You buy an account, and automatically in your hub there will be a little icon, a Discord icon, where you can click and it'll lead you and give you the entrance to the access to our server. And there's a great community. We thrive on our community because we help them, and it it's very, to me personally, that's besides the point, but it personally, it also enriches my day as well when I'm able to interact and share and learn from each other as well. We're always we're learning, we're becoming better ourselves. It doesn't matter how far you are already in your journey, how much profit you already extracted from the market. You're still a student. We still have to be humble and be able to learn from others. Who they may be doesn't matter, because you still have to keep learning all the time. You're never done learning as a trader. All right, that's GU, which hasn't come back, and it's not likely to come back. As we see, it's making a higher high. Maybe there isn't a setup here. Let's look at gold. Gold on the higher time frames, very, very bullish, right? Consecutive bullish bars. Doesn't surprise us. There's a lot of geopolitical uncertainty in the world, so it's logic that gold is used as a safe haven in times of uncertainty, heightened risk. So it makes a lot of sense that it is bullish. On the daily time frame, there isn't any structures besides the structure we already use for a reversal. That's how they are. See the the order block, right? That was created, came back to retested, and moves away. That's perfect, very beautiful reaction. And they created another one which may or may not be retested soon, but there isn't anything we can use so far. I did indicate that there is an order block here when I saw this pair earlier today, but this H4, you need to see things into context, right? The H4 is we don't have an alignment on the daily. It's very bullish, and yes, there is an H4. It is fresh, so we could look for alignment and for a short entry. And actually, there's a very beautiful outside bar here, so we could look for shorts. But keep in mind that the higher time frames is very bullish. So if you are able to find a short, I wouldn't hold it for very long. There's another thing I want to check, which is I don't see the quasi right there. No, I don't. So I wouldn't be considering this I wouldn't consider the neckline to be here. Actually, it is. Yes, it is. Okay, so that is the neckline. So we do have a quasi on the H1. And if that is the case, then let's look to see if we have entry order blocks. We have one here, and we have another one here. Since they're overlapping, we can use both of them together. Oh, that wasn't the right keystroke. All right, so we eliminate this and move this way around. So this area is very interesting on gold, right? So if we are going to see a reversal from this area, then it would make sense for price to use this alignment for its reversal. Let's look at how big these are. I see there is someone, Eduardo Gallego, asking about there is some issues with the hub area to get in, and asking for help. Eduardo, if you want to get in, I would advise you to go to our support on the website. There is a live support, and that's where those are the right person to help you with this. I'm from this position here where I am currently. I'm not able to help you, and if you only speak Spanish, por favor, si podrías ir al atención al cliente en el sitio web de The5ers, right? Ellos podrán ayudarte. There we go. Let's see. So this is the area we are looking at as if gold is going to have a reversal, right? This is the area it could use, right? It has high probability of using. The other thing is I want to see what this area is. Is it tight enough? And you ask me, why do it needs to be tight? Well, that's the data, $13 on the price of gold. And let's look at let me check how that is compared to the ATR, the daily ATR. And it is too wide. Okay, so this area is too wide for me, meaning that I don't consider it to be a great area to be looking for a short. So I need something else, meaning that this entry order block is too wide for me. I will not be able to take a short from there, right? Based on the data that I have, I wouldn't want to be taking a short. I think it's a lower probability. There is one thing though, the ATR on gold currently is, let me check on another screen, it's at 2802.63. So the ATR for today, 2802.63. Maybe I should just put it in 63. So that's the ATR. That could give us an idea if price is, I don't use it as an entry, but it certainly, as well, today is not a typical day. So this is 100% ATR. It wouldn't surprise me if today it's going to go 120, 150 easily because of those gaps, right? You don't create those gaps, don't get created just because it's a typical day. It has to be some some big things must happen before you can create gaps, right? Huge expectations needs to be adjusted, because that's what our gaps are. Between Friday and Monday, things change so much so that price opens at a very, very different level. So when those gap gets created, major things happened geopolitically or financially in the financial world. that the situation changed so much so, and those big changes obviously can cause bigger ranges. So it's not very significant today that we are right now at 100 ATR. We have gone higher already, and even with all of this, I wouldn't say it's a reason to short it. It does make it a little bit more interesting under normal market condition, because 100 ATR, you can start looking for that reversal. And we do have a quasi, and we do have an H1 order block to enter to go short, but it's not, it's too wide. So I need more. I need perhaps a another reversal pattern happening in here for me to go short, but not right now. We don't have that. That's on gold. No hay problema, Eduardo. No problem. Okay, so we let's see. So that's on gold. Is there anything, any pairs you guys want me to look at? Any specific ones? I mean, we've been asking. We've been so happy with Trump as traders that we want that volatility that he brings, but you gotta watch out for what we ask for, because this is what we ask for. This is the volatility we ask for, and sometimes it can be too much. Too much volatility isn't, if you're not prepared for it, it can be very, very dangerous. Just ask anyone who was stopped out on this, weekend gap. Can be very difficult to to know that in advance. Actually, there's no way to know that. It's you can have a guess though. I would say that one of these weeks Trump's coming in is going to make some new policy, implement some new policies, and we heard those tariff conflicts already, a couple of days already, when he was mentioning this is not new. So you could guess, have a very well-educated guess that this week or maybe next week, it could have Trump could have some announcement on the tariffs. Thank you, Ralph. We haven't checked the BTC yet, so let's take a look at that. I indeed mentioned that, so let's look at that. We'll look for the higher time frames, just using price action, nothing else. We have taken out that previous high very convincingly. So to me, it is no longer that. It is important. It is relevant. Price can come back and use it as support, but I don't personally. I don't use it anymore. Once it breaks it and it goes away this far, I start looking at it. I may have it there just to have an idea. In absence of other structures, I could use that. All right. So what do we see on a monthly time frame? We are in a demand area. Do you guys see that? We have a demand area where we are currently in, right? Created by that it's not an outside bar. It's a engulfing, right? So that's on the monthly time frame. Anything else? We don't have anything else. There is no entry, no bullish engulfings here. Lower than that. On the weekly, we do have some structures. And we do have, let's look at this. We do have a weekly order block here, but this is more recent. So we should use this structure, right? So that is the area where the sellers lastly took control. And we are back in a bullish weekly order block. This is a daily below us, not very, highly important because it is outside of the alignment of the monthly, the weekly, and other structures. But you can see that there is a I see. You can see that there is a bullish structure, a overlay of different order blocks on different time frames, and that's a good thing. You want to have those alignment put in. I see there is some problems with the website. They are working on it, Faisal. Our website will be on shortly. It's gonna let's be just be a little bit patient. It will come back soon. Our technicians are working hard at making it work properly again. Okay, let's look at we have the monthly, as I said. We have the monthly, the weekly order block, and look at, is it still fresh? We have 1, 2, 3. So yes, that will be fresh in everyone's book. So I think this area is important because of those two structures. The daily, we also have a quasi on the daily, which is simplified this as the quasi. It is at a top, which is a little problematic because you want to have those bearish reversals or this is a bullish reversals. I mean, you want to have those bullish reversals on a leg down, right? At the end of a downtrend, ideally. But I mean, these quasis, that is one of the ways that the market reverses, right? It takes that downtrend, although it isn't very long. And by downtrend I mean this: lower highs, right? Lower highs and lower lows. That's the downtrend, and it takes it to mount the reversal to continue higher. And of course, everyone who is a crypto trader who's long crypto would be happy to hear that we do have that bullish quasi created, and we did hit one of the demand zone that was created earlier here. That could mean where we push from, right? So where the buyers will be defending as we did, and that's, well, it's too early to say anything because this candle, which is the daily, we New York hasn't opened yet. We still have many hours to go, and this candle can look very differently at the end of the day. But so far, it looks promising. There is that big gap which will be closed at some point in the future, but it's difficult to say when. We'll have to see if we get a buyers taking over again on the daily time frame. Then yes, I'll be confident to take a position here long, but that hasn't happened yet. Not at the daily in any case. Let's look at the H4. Henry says, I see it has a high time frame triple top on. Yes, it let me see what you mean. Higher time frames, you mean the daily? While this being one, you could consider that one as well. And you were referring to these three. Sure, you can see that as a triple top. I don't trade triple tops or daily, weekly, and weekly double. Okay, daily triple, weekly double. Let's look at the weekly. Yeah, I see that as well, Henry. I don't personally use that in my analysis, but yes, I see it, and that's a sign. You couldn't trade these, and as it comes back to these areas that were created, you can try to short them. I think they're great areas to trade from. I use only the order block, so I don't use the amount of times it creates the tops, if it's the fourth, the third, and so on. But the more times it creates that a third, a fourth, to me, the more likely it is to break out and continue higher. I don't use it as a on my analysis, but it's a fair point. I think you're right. All right, let's look at the daily. What else do we see? We have that entry order block on the daily, and I should mark that as the way it should be. Good morning, Henriquez. How are you doing? Winsome says, How can we find entries in small time frames? That's a great question. That is a very good question. I will discuss that shortly in a couple of minutes. We'll go down to the lower time frames, and I'll tell you exactly how I do it, and you can use that as a template, or you can use it as an idea how you could frame your entry model, if you will, right? How you're going to be entering your trades. All right, so we have a quasi, and we are interacting with that order block, but it's too soon to me. In my opinion, it's too soon yet to say anything because it's just one bar. We haven't seen anything yet. What we could do is go to the lower time frames and look for quasis in that lower time frame as well. So that would mean marking this. That would be the H4. But as you can see, we only have actually one or two entry order blocks which have been already uh, invalidated. This is one, and this is number two. They're very close to each other, and actually they are overlapping. Are they? No, they're not. Okay, according to my definitions of the order block, they're not overlapping. That is an entry order block on the H4, and both of them has been uh, invalidated already, right? That tells you that you know if the bullish reversal structures are not being respected, that's a bearish sign. It means the market is may reverse later on from this daily order block. It may do that later on, but currently it's not listening. Um, you know, it's not listening to the other time frames, and it is yet to be seen if it's going to actually reverse from this area. If price is going to reverse from this entry order block on the daily time frame, they will well, not they price will I'm not sure if it sounded like Japanese, but I'm not currently speaking Japanese, and I believe I haven't in this stream either. I can't speak Japanese other than sayonara. um, well, so if price is going to reverse from this entry order block on the daily, think about it. Price moves, price moves has a fractal nature in a way it moves. And by that, I mean that whatever it shows on the one time frame, it shows the same thing on higher and lower time frames. So if it is going to reverse from this entry order block on the daily, whatever I may call it, if it's going to reverse from this area, it is going to be showing you signs of the same on other time frames, right? On the weekly, it's going to show you later on because it's a higher time frame. And on the lower time frames, let's say the H8, H4, H1, it's going to show you earlier on, right? Because those candles are formed more often within one day, right? More candles, right? 1 hour compared to one day. So automatically you will have those reversal patterns giving you an early sign before the daily actually reverses. But the thing is, the setup is on the daily, so you need to wait for that daily confirmation, right? Until you have that confirmation on the daily, you don't have anything, right? So you need to make sure you see that. I see that. Jonathan is on his way to the stream, and will be with us shortly. Okay, so yeah, so and that's a little bit of an art, not exactly. We had this very interesting conversation not long ago with a group of traders. How much of an art is trading and how much it isn't, and there's of course elements of both. And in this part, using different time frames and knowing when to use them is a little bit of an art. Of course, you can build rules, and I totally advise you to do so. That's how I work. But I recognize that there's also a little bit of a feeling in there, right? You can, if you're looking for that daily signal, it's not going to come from a lower time frame. A lower time frame cannot give you a daily signal. A daily signal can only come from the daily, right? Makes sense. So you have to understand that while you can get into a trade waiting for that daily signal, for example, this time where we are in a daily order block, entry order block, you may get on the lower time frame something that resembles a reversal on the maybe H2, H4, and that can give you an entry. And yes, you are taking it because there is an an area of interest on the daily time frame. However, you don't have the sign yet. You don't have the signal yet. So you have to treat it based only on the lower time frame until you have the daily time frame signaling as well. So and that is where you need to have the feeling, okay, is this going to be signaling still in the next couple of hours or maybe the end of the day? Yes or no. You have to, gauge that probability. And to answer Winsome question, how do we trade? How do we get in on the lower time frame when we have such an area? For example, on Bitcoin, where we have an area here which is of interest. Um, and I'll tell you how I do that. But before, actually, I want to see something. If we have, what is the range of this? It doesn't matter. No, it doesn't matter. Okay. All right. So let's go. What I do is I use the fractal nature. I use the fractal nature. Hello, Alexis from Colombia. How are you doing today? Um, we have, what I use is the fractal nature, right? The fact that the market uses the same pattern, the same candlestick formation on all time frames to indicate what it wants to do, or uses it as it is moving in the direction it is going. I use that on the lower time frame to get my entry. So I use the same concepts, the same order block that I explained earlier, right? The engulfings and outside bar. I use that on all time frames because to the market, it doesn't matter if it's on the daily, on the 4 hour. It means the same thing, right? So what I use is a fresh order block, and we have someone with us in the background. Um, I use the fresh order block and the quasis going down to get my entry. So I will go to the 4 hour order block. Hey, Jonathan, I'm finishing the explanation. If that
Sure, of course.
so so I use the order blocks on the lower time frame to get my alignment, that top down analysis to fine tune the area, because this area is too wide. Although you can build a system using this as the entry, as an entry, but it's, in my opinion, or at least the way I approach the market, is too wide. So I want to have a more refined entry, and currently we don't have that yet. But we could, as I indicated, we could have, for example, you could see that there is a structure here, right? There is an engulfing, an outside block, not an outside block, an order block that was created on the 1 hour. Now, I don't use this combination of a 1 hour with a daily area, but the concept I do, right? So the concept of using structures on the lower time frame to indicate likely areas to get in, and then using the daily as my overarching idea that is going to go much higher. Even though I don't have the daily yet, I could be entering and sort of preemptively, although they're not preemptively because they are valid entries on the lower time frames, and to get the idea, not get the entry, the tighter entry that I talk about. And I keep using this. So I go to the lower time frames, even lower, and I use the same idea. So in this case, you can see that we do have a quasi on the 15-minute, for example. There you go. And it could come back to this area, for example, because we do have an entry order block. No, we don't have. Actually, we do. We do have an entry order block here on the 15-minute. And for example, so I keep using the same idea, quasis and fresh order blocks on the lower time frame until I get something that is tight enough that I can enter, defining my risk well, and targeting something that makes sense on either the FTA or the highest point it has reached so far. And by the time the daily triggers, I can have, if and when it triggers, then I can move part of that maybe for a daily or a weekly target, right? And that's how I catch those big moves that I like to catch, but are not as frequent as we would like them to be, of course. That's it for me for now. Jonathan came in, and let's see. Yes, this is. So I'm gonna be leaving you guys. I hope you guys had a great time with me. Thank you all for all those good questions. And I would like to, well, thank you all for your attention. I'll be back in the last hour of today's stream. As you can see, we are growing, we are expanding, we are making sure that we cater to you not only for 2 hours as we did before, but we're doing this basically from London open until almost London closes, which is including New York open as well. So this is getting exciting, guys. This is what we envision, and this is the beginning. We haven't finished yet with our plans. We are just scratching the surface of our potential. All right, see you all later on. I'm not gonna click any end stream button, so don't
please
panic.
don't do that.
Don't panic. I'll see you guys soon again later on.
All right, thank you, Victor.
No problem.
See you later.
Bye bye.
Okay, guys. So what I want you guys to do now is I want you to hit that like the live stream, and show us that this is something that you want us to continue doing. Also, leave a comment in the comment section. And by the way, I see Harash, I see Henry. I can't believe you're still here. 3 hours and 11 minutes, and you're still hanging around. That's dedication, and that's the 5ers community right here. We launch big community, truly global community. We also have a Discord server, so everyone who has a funded account or an evaluation or had an account in the past, you can get into the 5ers hub and join the Discord server in the lower left corner of that. Coffee. I do like my coffee. I also like what I'm seeing on Euro GDP. I see a channel, I see a breakout, I see a retest, and I see the future. And what do I see in the future? I see a bounce. I see prices go up. And that's the analysis on Euro GBP. Guys, let me know if you have any questions. Any questions? Maybe some trading psychology things, because we do have Dr. Deanna Cole coming up in about 20 or 15 minutes or so. That's going to be the start of her segment, the Traders Mindset Show. And we're going to be talking about trading psychology. So I'm going to be here with you for about 1 hour and 50 minutes. And then Victor is going to be back and take over. And then Deanna is going to be here from... she's going to be here in 50 minutes, and it's going to be staying here for 2 hours, and it's going to be all about trading psychology. Make sure that you stay around. AK is asking, does 5ers give real payouts from funded account? Of course, you get a real payout. Good payout. We never deny any payouts. Okay, we never deny any payouts. Of course, if you make money on your funded account, you make real money in your pocket. How do I deal with Trump for the next 4 years? This is an interesting question, and I think so. Yeah, it's a good question. I mean, it's not about how we're. I mean, it's a good question. This coffee is particularly good today. Okay, how do we deal with Trump? How do we deal with Trump? So, first of all, you gotta ask yourself, are you trading from a fundamental point of view? Are you a fundamental trader or are you a technical trader? Now, of course, if you're trading on fundamentals, yeah, good luck. You're gonna have notification on his Twitter. You know, you see that notification bell, you know, but by the way, speaking of notification bells, make sure that you do subscribe to the channel, hit the like and subscribe and hit the notification bell on this channel, and maybe also go to Twitter and hit the bell notification button on Trump's Twitter post. And because, you know, that's where everything happens. It goes out on through the social and then it gets reposted on an X or Twitter. I'm never gonna stop calling it X. Twitter, I mean. And so if you're a fundamental trader, obviously you have to look at what is he saying and what is he doing and what's the plan going forward. And it's as difficult and confusing from a fundamental point of view as it is from a technical point of view. Because I'm going to show you something, right? Look at this. I opened a position last week. And I woke up this morning and, you know, you're looking at this and you're thinking, that's not too bad, you know, gap down, it's not too bad. But guess what? I'm not in this position because I got stopped out of slippage, because of slippage. Now that's just the reality of holding positions over the weekend, especially when you have things like this going on. Now, obviously, the right thing to do would have been for me to basically just close this trade on Friday, because we did know that Trump started talking about tariffs on Friday. We knew that they were coming this weekend. So honestly, maybe it's close to position. The thing is, though, I had my stop loss 120 pips below price on the close on Friday. Woke up Monday, I'm stopped out. Price dumped 65 pips, and I apparently had a slippage of 40 pips on the way. It's absolutely insane. But this is the shit that happens when, you know, when you're in the situation and the scenario that we are in right now. Well, things can happen, and apparently they do. So yeah, there's a real risk of holding positions over the weekend, but it's also one of the reasons why I'm trying to average into the trade. So let me show you that, right? We have a lot of questions as well. I'm going to be covering those questions before Diana comes in here as well. So, you know, we have now what I'm doing is, you know, we're oh, Diana is here right now. She's a little bit early, but that's okay. I think a lot of people are. So maybe a thumbs up if you want me to add you. Yep, no worries. We still have time. Still have quite a lot of time, so no worries. You can take your time. Yeah, coffee from Kenya is good. I like coffee from. Man, my brain is failing me. Ethiopia, that's right. Ethiopian coffee, that's the best one. Okay, can I add you, Diana? All right, welcome.
Thank
Happy
you.
to have you
Good
back.
morning.
Good morning.
Good to be back. How are you?
Well, despite the the movements in the market, I'm quite well. Thank you. How are you?
I'm recovering. I was sick all weekend, so if I seem a little bit out of it, that might be why.
Well, hope you're feeling better.
Thank you. How are things going so far? How's the market treating you?
Well, yeah, it's you know, I've just explained here that we had I had a position open this position last week. I was on Friday close, I was price was 100 pips above my stop loss, but I got stopped out anyway. With the gap down and over 40 pips slippage on Wanda, which is just absolutely crazy. Wow. But I think we're in you know, I haven't seen moves like this since I don't know when. I can't remember a time when we had these gaps. I mean, the S&P 500, if we look at the 1 hour, this is one big gap right here. Now Not even sure we had that back in the time of COVID. We've been streaming here all day. We're 3.5 hours already in, and we had Dirk here in the morning, which is he's a very experienced trader, very good with fundamentals, and he talked about this. He haven't seen this since the crash in the Swiss franc back in, I believe, maybe the 90s or something like that. So yeah, this is very significant times, definitely.
Yeah, there was a big gap last weekend as well that caught me off guard. And so it's surprising to see that 2 weekends in a row as well.
Yeah. Sorry, I just had a message here.
So
okay.
how does that change things for you? Are you gonna, moving forward, are you going to change things up for a while just in case we continue to see that type of action, or how will you react to that? How will you respond?
Well, like, I had this idea, and I've been building on this case where I'm looking for weakness in the dollars. I'm looking for USD weakness. Now, obviously, what we saw here is not USD weakness. It's quite the opposite, right? So at this very moment, I just have to accept that idea is just gone. I have to throw away that idea and then wait for maybe some more confirmation on that idea. But I do look at the Dixie here, the dollar currency index, and I mean we have obviously have a very strong break to the upside here, but we are creating quite a big wick here on the daily. And I mean, technically, this is actually a lower high. If you look at it like this is technically a lower high. Now, I do think we're going to be trading higher. I do think that perhaps I don't know. I really don't know, but I think we're going to be trading higher. I mean, it kind of feels like. But if we go back to what happened last time Trump got elected, we were basically seeing the same thing again. So we go back to 16. So this is November 2016. And what happened was, obviously, got a move to the upside, another break to the upside, but eventually we start creating those lower highs. And for the rest of that, all the way till 2018, maybe 2019, we did have quite a significant downtrend on USD, and we might have something similar playing out here. So we'll see. This could also be one of those scenarios where the market has just stopped out everyone that was betting on USD weakness, and that's usually when that idea comes to fruition. When everyone is out of the game, that's when the idea starts working in their favor. You know what I mean? Like the market likes to stop out people before making the real move.
Yeah, that's an interesting idea, because I will say for myself, certainly I have not seen what I thought I would see, or my best guess since the election, since the new year, or not the election, inauguration and the new year. I certainly was guessing it would look a lot different than it has been. So that's an interesting theory that makes a lot of sense.
Yeah. And I also want to, everyone that's coming in here for the live stream, just want to say that we're doing something new here today, and we're going to be continuing with the schedule. We're starting 9:30 GMT every morning now. So about a couple of hours after the European Open, we're starting. And today we started with the Dirk session, and now this time is Diana's session. So we're working on a complete revamp on the graphics and everything here. So Diana is going to have her own little cool intro and graphics, and this is going to be her little corner of the live trading room. And obviously, it's going to be focused on your trading, and also of course, trading psychology. So from a trading psychology point of view, let's say that we're in, let's say you have positions in the stock market or in crypto, and you wake up on Monday and it's just red all over the place. The first thing most people are thinking about is, of course, should I sell? Mm-hmm. And that's interesting because, and we've been doing this for a couple of years, and I think you can agree with me here that when you have a very strong urge to exit a position, that means you're quite close to the bottom, right? It's funny how that works. And
Right.
I wonder where that comes from, like, why is the urge to sell a position so strong at the bottom of a market, and you want to buy more at the top of a market?
Mhm. Well, in a lot of ways, trading in general kind of goes against our natural tendencies, right? So that is kind of what makes a market. And so, um, in a lot of ways, we're kind of programmed to not be successful at trading. And that's where it is really, really important and really helpful to have a system and a mechanism that you trade, a guideline that you trade through. And so it's not about having rules for the sake of having rules, but the idea is to have a playbook of how you respond to these things so that you can be consistent in how you approach the market. Because left to our own devices, we're going to do the wrong thing at the wrong time. Exactly. That's just how we're programmed. And so I for one fought for a long time against having rigid rules. I'm not a natural rule follower. I like to kind of be a bit of a free spirit. And so for me, it felt like having rules that I followed as a trader were sort of like an unnecessary, I kind of thought, well, I can do it. I can figure it out. I don't need to have rules that like tether me. I want to be free to make my choices. But you're exactly right. We do the wrong thing at the wrong time. And so having rules in place that allow us to always know if we're making the right decision or the wrong decision, not because there's one right or wrong decision, but because we're going to commit to a certain subset of rules or set of rules that we're going to follow so that we always know if we are doing the right or wrong thing at any given time. I think that can be really helpful to help traders get past those pitfalls of exactly what you mentioned. That can be really helpful. And you are probably best off having them written. You don't necessarily have to have your rules written, but a lot of times having them written can help you stick to it a lot more, diligently.
Yeah, I think rules definitely very. I think it was Mark Douglas that wrote something like, you want to be very rigid in your rules and fluid or flexible in your expectations. I believe that's something he said, and I really believe that you. What I see, most people they go in with too much risk. They feel very confident in a setup, and they feel very confidently in, let's say you enter a position on EURUSD or something, and you feel very confident that this is the bottom, and you go in because of that confidence. You go in with a little bit too much risk, and then it goes against you, and you kind of panic because you risk too much, and then you sell. And it's funny that almost every time when you sell that position, you have a reaction, you have a bounce, and then starts moving. And it's just, I think rules in that sense, and also when it comes to risk management, just small positions and take it easy with the position sizing and risk small. I really think having rules like that is super important, because obviously then if you have a situation like that, then you look at your rules and you say, I'm not supposed to be selling at this level. I'm not supposed to be selling unless my stop loss get hit, or I'm not supposed to be selling when I have these feelings as well. Because I do feel like having, I'm very big at having that mental edge. I think it's one thing having a technical edge, but having a mental edge is as important. Would you say that, identifying your emotions and seeing what each of the emotions might mean in terms of what the market is doing, do you feel like that could be a secondary edge compared to the technical edge that you might have?
Yeah. So I'm with you. I think risk is the number one, even ahead of psychology is risk, because if you are risking way too much, you might have the best psychology in the world, but risk too much and that goes out the window. And, you know, we can really modulate our psychology a lot based on how much risk we take. So if we're having experiencing way too much emotion, the first place to look is how much you're risking, if it's too much. And that might vary. Sometimes you might be able to take more risk than other times. There have been times for me personally where I have identified how much risk is right for me. And then sometimes I'm just not feeling it and I need to cut back my risk temporarily because for whatever reason, I'm feeling nervous when I'm taking a position or I'm super unsure. So I scale back my risk for a time and then go back to it. And so to your question about emotions, there are only 7 basic emotions. Of the 7 basic emotions, the primary emotions that we're going to experience as traders are primarily fear. Fear is going to be a big one. Sometimes anger can be an emotion that is relevant to trading. Disgust, sadness, surprise is one of them. That isn't one that necessarily, that's a kind of a positive emotion, and then happiness. So the primary emotions that we're going to experience in trading really comes down to fear, anger, and disgust and sadness. Those are the 4 main ones. And so to me, more important than focusing on emotions is what are the thoughts behind that? It is important to think about the emotions that are involved, but what are the thoughts that are driving those emotions? So for example, if I am experiencing fear, what am I thinking? What does that, if it's, for example, fear about my stop loss getting hit, what is it that I'm afraid of? What does that mean to me, right? We all know that our stop loss getting hit, every trader has that. Every trader experiences stop loss getting hit. Nobody doesn't experience that. And so why am I feeling fear around that? What is that for me? Maybe it means something to me like, I don't know what I'm doing. This isn't going to work out for me. Maybe I have some kind of like bigger meaning that I've ascribed to my stop loss getting hit. And then my job is to figure out, is that true? When I don't have an open trade and I am not in a live trade, are those thoughts true? And if so, then you need to work through that. But really, for me, it's the thoughts that are important. That's our rational brain. That's our logical brain. And, we're really blessed to have that on our side, that we can be more than our emotions. We don't have to just operate just on the emotional level. We can look at the next layer, which is the thinking and the thoughts that drive those emotions. And for example, it can change, right? Like if you and I both take a position and we're both stopped out, to you, it means nothing and you just move on. And to me, I have some kind of, deep-seated emotional conundrum about it. I need to figure out, why is that? Maybe you're looking at a stop out as like, hey, this is just part of trading. This is just what happens. Maybe you see it as, your insurance policy. I know last time I was on, there was a little bit of, I guess ICT isn't very well received in the 5ers community, perhaps. But I will say the most important thing I ever learned from ICT was, he said, my stop loss is my insurance policy. And I thought, wow, that resonates with me so much, because before that, I was having kind of an emotional reaction to my stop loss getting hit from time to time. And when I heard it said like that, I thought, I can really use that to my advantage. That is a mental framework that can really help me. And so whenever my stop loss would get hit, I would try and remind myself, right? Sometimes you have to force that thought on yourself and remind myself, look, it's just an insurance policy. That's all it is. My insurance policy got enacted today. That's it. Move on. And that really helped me. So I hope that answers your question.
No, definitely. I think that's and also, before you get into that trade, if you're going to be viewing your stop loss as an insurance policy, then when you when you get that insurance policy, you accept the price. You accept the price of that insurance policy. You know, every month you're going to be paying this, and that's what you pay for, you know, the risk that you're taking. So I think before you get into trade, you obviously have to remember you have to accept the loss. You have to accept the price of that stop loss before you get into the trade. And I feel like a lot of people also, you kind of have to ask yourself, what are you risking before you enter a trade? Because we can risk many different things. I mean, maybe we're risking a certain monetary value. We're risking money on the trade. We're risking losing money, but we can also risk, you know, there's many different things that we are risking with taking a trade, and also understanding what's really at risk will help. Excuse me. So I feel like for a lot of people, when we talked about this last time I were on with you, we talked about the idea of we put a lot of our ego in trading, and a lot of people view their self-worth as traders with their P&L and the equity curve. So you got to think like that's also something that you're risking, and you have to accept that whatever happens on this trade, it will not affect my, you know, self-worth as a trader, and those sort of things.
Right.
It kind of goes deeper, you know.
And the thing about psychology is it never ends. Even the best traders in the world that have had their system forever and they know exactly what they risk, your psychology never ends. So even experienced trader, they have a fight with their spouse or a bad day, you know, their kid gets into trouble and they're upset about it or whatever it is, that can impact their trading. Even if they've been doing this for, you know, 25 years, it doesn't matter. That still has an impact on them. And so one of the good things about that, though, is that we can continuously work to get better at it. So we never master our psychology with finality, right? It is always an ongoing process. And so we need to continue to work at it and evaluate and reassess how we're doing. And how well are we thinking those things? Like you said, how well are we, you know, thinking about the meaning of a stop out or something along those lines? We can continually work on that.
Yeah, definitely. I think, you know, I kind of want to go to the subject of over trading, because I feel like from all the years, you know, all the years I've been in this industry, and all the people I've mentored and all the people I've helped with trading, the first thing I tell them is trade less. Whatever amount of trades you're taking today, you probably need to cut that in half. That's the first thing you have to do, and then focus on just trading less. Because most people, they come to me and say, okay, I took this trade, and then I took this other trade, which was a little bit worse, not the best entry. The first trade was really good, and then the second one, not the best trade, and then the third one, not great at all. And then you just continue spiral out of control, and you have too many trades, and with every new trade, there's you're kind of missing important details of every new trade. So from my experience, over trading is probably one of the most common issue for new traders, and the reason why a lot of new traders fail in this industry. Would you say that, like, what from a psychological point of view, how, because the problem with overtrading is we only know it's overtrading after we've actually done it. It's very difficult to understand that, you know, it's not like I'm trading and then all of a sudden, like, okay, I'm overtrading now, and I'm going to continue doing that. It's mostly like when you go through your journal and you realize that, okay, I was actually overtrading. So how can you you know, check your emotions while in the process of trading? Do you have any tips on questions to ask yourself, or things to kind of take a pause and reflect on the situation?
Yeah, I mean, I've always, so when I was an intermediate trader, I spent a lot of time thinking about overtrading and what does overtrading mean, because overtrading is, like you said, you never really know what is overtrading. It's really hard. What might be overtrading to you might be like a perfectly valid system for me, or vice versa. Like we don't know, but it's person independent and system independent. And I think the best way to combat this, and it's probably an answer that I know I didn't want to accept necessarily, is that having a systematic way of approaching things as much as possible. It doesn't have to be every single piece of your strategy, but if it can be, even better, is a great way to help keep yourself in check. And when you do that, you do sort of let go of the fact that you are going to have to miss some trades, that a trade that you might normally take, you might have to let go, and it could go on to be a winner. But what you do when you sort of systematically approach the market is you have an understanding then in the moment, right? It doesn't even have to be after the fact. Then it can be in the moment. Hey, I'm taking trades that I'm not supposed to be taking. And right then. You might do it anyway, but at least right then and there, yeah, I'm not following my plan. So to me, the best way to combat that is to have very defined ways that okay, yes, this is a valid trade. This meets my criteria. Maybe you have a time-based approach. So meaning I only trade from this time to this time. Okay, well, we're in that time period. So yes, this is a go. That way, if you're not doing that, you're trading outside that time window, or you're reaching too far. It doesn't really meet your criteria, but maybe meets 80%. Now definitively you are overtrading. You're not following your system. You're not following your plan. And then you can tell right then and there, this is not, you're starting to get into dangerous territory. Otherwise, how would you know? I mean, it is really hard.
Yeah, I mean, for me, what I did to really the combat over trading was simply to say a number of trades. I'm just going to take a specific number of trades each day, and I'm not going to go over that. So what I did was I looked at my backtesting data, and I looked at the average trade per day, and then I looked at some of the outliers, like some days I might take 3 trades, some days I might take just 1 trade, but I never go over 4 trades a day. So I know that my max limit of trades per day, looking at my backtesting and the statistics, is 4 trades a day. So if I ever trade more than 4 trades a day, statistically I would be over trading. And then I started with just saying to myself, okay, 1 trade per day. I'm just going to take 1 trade per day. And when I got used to taking 1 trade per day, I could increase that to two trades per day. And being very disciplined in only taking just a very few number of trades per day, the idea of over trading kind of disappeared. I never thought about it. Like, it was just disappeared as a problem, because I basically created a new habit and a new routine of thinking about number of trades per day differently than what I did before. And that's just exactly what he said. You create rules, and that was one of the rules I created. But I'm sure that you have, the system that you're trading, I'm sure that you have some type of, if not a physical checklist, you have a mental checklist that before you enter a trade, certain things have to align. And if they do align, it's going to be impossible for you to overtrade, because that means if you're trading more than what you statistically would do, but you're following the plan, then it just means that the market is providing more setups to you than what it normally does. So having a system with very clearly defined rules and just following the rules, I guess that's just, in theory, it's just such a simple way of combating overtrading. But it's just that. And I think this is the problem that I feel a lot of people watching probably have is, and I'm the same. It's like, that this trade does not fit the system perfectly, but you take the trade anyway. Like, you take the trade anyway. It's like, well, this time I have a feeling, and I feel like this is going to be a good trade, and it never is. And even if it does, it's a bad trade because you didn't follow plan. So I think that's the, and there's no easy solution to that. I think you just have to tell yourself, well, just act professional. You know, if you're going to be in this industry, you better do it right. If you're going to be a full-time trader, you're going to make money from this, you better act as a professional, right? At some point, you have to be honest with yourself, right? And just, you know, it's a difficult situation because there's no real fix to that. It's just, you just have to do it, right?
Right. I will say, I've never heard somebody say this, but this is my opinion on that, is I do think that every trader should probably do this at some point. And even if you are maybe an intermediate trader, it's still worth doing this, which is spend some time, maybe at least a month or two, of just taking all the trades that you want. You need to do it in a way that's safe for you, which would mean either paper trading, obviously, forward testing, or if you're able to put some money towards your trading education via prop firms. For me, I did it with prop firms because I knew forward testing with, forward testing to me didn't feel real enough, but doing it with prop firms felt, I still felt the sting a little bit, but it was worth that market tuition. And I just spent a couple months just taking all the trades. If I felt like it, I did it. And then I also took my real trades too. I'm sorry, go ahead.
No, yes, so sorry to interrupt you, but this is, I know we talked about this last time as well, but so I do really see the positives of that, but also it feels like it might, because you do this long enough, I mean, there's a saying that, 90 days creates a new habit or a new routine. So what if you take all the trades you find, and you do that long enough, wouldn't it be difficult then to kind of move backwards and start trading less when you've created that habit of just taking every trade?
So here's the thing. When you have never taken these trades, and maybe you do it from time to time, but you haven't really done it enough to feel the burn, right? The burn of the hot stove, right? So you never really know. So for me, I was finding myself in situations where I was trading my system, but I was still, excuse me for 1 second.
No problem.
I was finding myself in situations where I was trading my system really well, but then these bad trades would creep in. Trades that did not fit my system, but I just thought, well, it's close enough. Let me just go ahead and try it. And so my thought was, okay, I'm going to spend some time taking these trades, doing whatever trades I want to do, that don't really fit but are close enough, and then just see if, what happens. And what I found over time was, hey, when I take these trades that don't fit my system, they don't work out. And so over time, I didn't want to take those trades anymore. I wasn't tempted by those anymore because I learned, yes, a hot stove, in fact, does burn. There's no temptation to touch a hot stove anymore because I know it burns. So it didn't become a habit. It became a situation where when I saw those that were tempting, they weren't really actually tempting anymore because I remembered, hey, you did this before and it did not work out. The appeal was gone. It was completely lost on me. I wasn't interested in those trades anymore. And then not only that, another side benefit is I learned a lot. I learned things that were important, I'm trying to think of an example I can share, but I learned different things that I needed to incorporate as well that I wouldn't have known if I was solely fixated on trying to make money and trying to push my system ahead. Instead, I was kind of free to be back and step back and see it for what it is. And I was able to learn what really, really worked. And so it wasn't a habit. A habit becomes a habit when it rewards us, right? But this was a situation where it was kind of like, I don't know, I kind of think of like a parent saying, yeah, you make your decisions for once, to a teenager or something, and then they can go out and learn what works and learn what doesn't. It was kind of like that. And then they come back, right? I came back, and from then on, I just wanted to trade what I knew worked. And I really understand, okay, this is why I don't trade these, close but not quite trades. I understood then the reason I don't do those is because, yes, sometimes they work, but truly, from experience now that the vast majority of times they do not work, and it's not worth it. But I learned for myself, you know what? You can take those trades. You can stray from your system whenever you want. You have autonomy as a trader. But why would you want to take a trade that is not very probable? But again, I only knew that because I had taken those trades many, many times. So it didn't become a habit. It was a matter of like really being able to understand why something didn't work and why those trades aren't going to tempt me anymore.
That's interesting. Yeah, definitely. So I understand now. You're just gonna throw yourself out there, and you're kind of gonna get, you want to feel that burn to really understand, because we all have that urge, like we want to trade, want to take more positions, and then you kind of give in. You give in to that urge, and then you just let it play out, and then you see, yeah, this works terribly. or maybe you're just very good at discretionary trading and it works. And then that, because for some people, I do believe that they do take every trade they see, and some very small percentage of the traders out there are very, very good at discretionary trading, and for them that it might work. Most likely not, because you need to have many years of experience to actually be a trading on that intuitive side of your trading. But I want to see your charts. I want to see what you're up to in the markets. Are you looking at anything specific? Are you trading anything today? We have the U.S. markets are opening in about 9 or 8 minutes. It's gonna be interesting to see what happens to the markets. I would kind of expect a buyback. I mean, that's usually what we get, usually what we see. But I don't know. I don't know. And then maybe I guess Trump is going to be speaking. I mean, on the U.S. tariffs. I don't know, Canada, Mexico, all of that. Probably going to say something.
Is that today or?
I don't know. I'm not saying that he's scheduled to speak, but all he has to do is just write something on his Twitter and gets the market going. I'm gonna bring your charts up here.
So I just want to say something real quick about the just going out and trading as much as you want to trade. Again, it's only meant to be temporary. It's not meant to be forever. But the point is to learn why you're why you're doing something, but you also want to understand why you shouldn't do something, right? So when I was a little girl, I was swimming, and there was a deep end and a shallow end. I was probably, 3-4 years old. And I thought for sure I knew how to swim, and I didn't. I knew how to swim with floaties, but I was convinced I knew how to swim. So, I was warned not to go in the deep end, that I didn't know how to swim. And my mom said, stay in the shallow end. You don't have floaties on. You don't know how to swim. And of course, I knew better. And I ended up in the deep end. The tube that I was on flipped over, and I found out really quickly I don't know how to swim. And of course, my mom was watching and whatever. And ultimately, she pulled me out. But after I was like fully submerged, fully under the water, it's the same thing. I never did that again, right? I understood then, you know what? You actually don't know how to swim. But until you find those things out, and maybe this isn't for everyone, but for me, I need to understand why it doesn't work to do something. I'm not okay with just saying, well, so-and-so said, only do so many trades, or only do this, or only do that. I need to know why. I need to understand why. And so it might not be for everybody, but I think it can be a really effective way to understand if you're struggling with continuously touching that hot pot, right? Touching that hot stove, if that is an issue for you, take some time to put yourself in a safe environment, touch that hot stove as many times as you need to really understand, you know what, it is a hot stove. And maybe you'll find out, like, well, this actually is okay. So a trade that you normally wouldn't have done, you find out it's okay to do that one. That's all right. So just an idea. All right. So these are
and that's very actually very, very good example as well. And I it's very interesting that you bring that up, because definitely, like, it kind of gets me interested as well, and maybe doing that, like having a section in the live stream where I get a funded account, I get a challenge, and then just go into charts and just take every trade, and then we'll see how quickly I lose that account.
Yeah. I mean, and that I think it's really good to do it too if you already have a system that or maybe you think you are onto something. Maybe you don't know for sure, but you think, hey, I think I have something here. I don't know. I just learned so much about my system. I really did, because it also expedited it in a lot of ways, because I was able to take every trade. I didn't have to worry, well, I mentioned last week, I pay a lot of attention to what time I'm trading. So what times are most effective for my system? I didn't have any tethers. I just traded whenever, whatever. And again, really, really learned a lot from that. Times that I thought maybe weren't okay, actually turns out they were okay. I just never traded them before. So, it's not a forever thing. I don't think it's going to create a bad habit, because the truth is you don't actually desire to take trades that are going to make you lose, but you might not know. If you've never taken the trade systematically, you might not know if that is a trade that's going to cause you to lose or not. And the fact that with trading is so challenging, because even a bad trade can sometimes win money, and a good trade sometimes can lose money. So if you're just doing one trade every now and then, you don't have enough information. But if you just can take as many trades as possible, you get a lot of information, and then you can really understand what works and what doesn't.
Yeah, I like that. Definitely something I will. I'll probably try, because now it's now that I'm swing trading. Looking at the long term. Some days I get tempted. I look at 1 minute. I'm like, oh, this is interesting price action right here. So yeah, maybe I'll start doing something similar as an experiment.
All right, so this is the NASDAQ. Looking at the NASDAQ, we're at about an hour before the open. Last week, the weekly chart is on the right. So you can see we had a wild week last week. If you remember, boy, it was up, it was down, it was wild and crazy. So last week we kind of had this long tail. It started and then went all the way down and made a huge reversal off that. Then, like you had mentioned, huge gap down. This is the 4 hour where my cursor is now. Huge gap down. What is that? Looks like, wow. Oh, wow. Almost 300 points. Whew. That's a big one.
Yeah, that's absolutely crazy.
I think that's even bigger than last week. Let me see.
Yeah.
Yeah. Oh, yeah. Way bigger than last week. So last week it gapped down, and I thought last week was a huge gap. Last week it gapped down 137 points, and I thought that was huge. Now it's almost 300 points. It might have been 300. I might not have had it exactly measured correctly. So, wow. Okay, so huge gap down. So an hour to the open. One thing that I like to look at, it's a little hard to see here. I'm not sure why this is. I don't know if you can see this here, but this is the Asian range and the London Open range. And the London Open was 243% compared to the normal. So the average over the last 50 periods is 34.5. So much broader range in the London Open, and also the Asian range, even though that looks like, your eyes kind of deceive you, but it was 216% compared to the average over the last 50 periods. So we've had a pretty broad range in both the Asian and the London, the Asian session and then the London Open. So will be interesting to see what happens on the Open here. So today we do have high impact news, manufacturing PMI at 10 a.m. And that's it for the day. But going on the rest of the week, Tuesday is JOLTS, Wednesday is PMI, Thursday is unemployment, and then Friday is NFP. So a really big news week coming up. So should be an interesting week to see how things happen here, how things unfold. We do have a bit of an upside bias from kind of the higher time frame and on the lower time frame as well. So we'll see how things change during the Open. We've kind of been just consolidating for the last, I don't know, few hours or so in this little range here. Since about, what is that, three or so, bit of a range. So should definitely be interesting, I would guess, for the Open to see how that happens. And both the previous two sessions have been broader than the average. Almost 2.5%, or sorry, 2.5 times the typical in the London Open and just over 2 times the Asian range. So we are getting a bit of a consolidation here, and I would expect potential for some volatility going into the Open.
Are we thinking a fill of the gap today, or I mean, obviously it's quite difficult to say, but I do use like last time we had it didn't fill the gap the same day, but it definitely put in the low on that same day. So I'm thinking maybe have we seen the low? It looks very likely this the move down that we had now looks very similar to the last time. So was it last week? Yeah, last Monday actually. So yeah.
I don't know. I'm not sure, but let's take a look. So here is kind of like a channel, right? And we had hit the channel a couple times and then kind of pierced through the channel, and now we're right back at that channel again. So might this provide some kind of support potentially? Here is the gap down. Let's move that in a little bit so it's easier to see. Here's the gap down from the Open on Sunday evening, where price gap down at the Open last week, but it was all the way until Friday that gap was closed. So, it gapped down, let's see, Monday. Yeah, so sometime Monday, looks like the afternoon was the low, and then it just kind of slow and steady up towards the gap fill, which didn't happen until Friday. So, who knows if that is any indication of what might happen. Right now, to me, it looks like there's an upward bias, an upward tendency at the moment. But to think that that's going to happen today, I don't know if I would be willing. I mean, I don't know. It could happen, but I guess I don't have a strong opinion on that one way or another. What do you think?
Well, I think not having an opinion is a great thing to be able to admit as a trader. I think the best trade is a lot of times no trade. So being able to say, I don't know, and maybe even, I don't care, is actually, it shows to me that's a strength as a trader, because a lot of times we're doing these live streams and we want to help people with analysis, and they ask, do you think this will happen? And a lot of people, they try to sound smart, right? Like, yeah, that's gonna happen because of this and that. But sometimes as technical traders, we just have to say, I don't know, and I don't care. I'm just gonna trade whatever I see. I'm gonna be reacting to what price is doing, and not what I necessarily think price will potentially do in the future. With that said, I think there's going to be a gap fill here. I don't think we're
today.
I don't, not
not
today.
today. Okay.
Probably not today. Probably not today, because I feel like the thing that brought the markets down is not going away. It's the 20% of on Canada, 20% on Mexico, and we actually potentially have more tariffs coming up on EU. So I don't know, but then again, I mean, the move that we saw now, maybe that's pricing in this, and then the US wakes up and maybe I said this last time as well. The US is going to wake up and they're going to see, like, okay, so everyone else did the job for us. It's already we're already down at these levels. Now it's time to maybe recover at least a bit. But looking at the markets, I do think it's especially the Nasdaq here. I mean, we are at a point where we might break high time from structure. It's we continue lower. We have a dangerous structure break. So it's going to be very interesting to see what happens here going forward.
Yeah, and we've had pretty clear structure on the 4 hours. So like, it was pretty clear, like almost picture perfect with the lower low, lower high, lower low. I mean, that's as clean as it gets. And then started to see, like, okay, well, this is different. And then, higher high, higher low started to come in. And then here it's like, okay, well, this is a little bit confusing, because that is starting to look like a higher low, right? Like price broke way down, but it didn't I don't know. I feel like here it kind of got a little more confusing. And then this is definitely a lower high because it didn't break above here. And so would it make sense to suspect that maybe price is going to move lower? It might. But then again, huge gap down. And so far we held here. Maybe we're going to start to see a push higher. So I don't know. I think it's super fun to guess what's going to happen, but I also think we're better off reacting to whatever happens, because I have no idea. And also the all-time high is not that far away. I think we will see an all-time high break in the near future. I don't know when. Yeah, we're only 1,200 points away, which in the NASDAQ is like, I mean, it can move crazy. Like here, this day in 4 hours, it moved 1,000 points. So who knows what's going to happen?
It can really start moving quickly once it starts. I'm looking at at least on my chart, I'm looking at a 20.6 or 2,600, 2,500-ish area. And I'm thinking, as long as we hold that as support, we're good. We're still in, somewhat of a range. But looking at the markets, historically, once we break weekly, a strong weekly support on equities, it's a lot of times we have a major correction incoming. So we are, of course, at a point where we're close to support, we're close to all-time highs. We're getting that confused feeling when we're looking at the charts. We're having lower highs and lower highs and higher highs, and we got lower, it's just all over the place, and it's hard, it's difficult to get a clean read on market direction here. So I feel like I don't think this is the beginning of a crash or a market or a recession or anything like that. But if we break down here, then I'm obviously watching this area as a good example of a distribution range. But it's too early to tell, and I feel like people are a little bit too bearish for this to be the top.
Mm-hmm.
And because it's like everyone's like, this is not good for the market. The market is going to crash. That's not when the markets crash. The markets crash when people, go all in. When they're like, this is the future. Now it's up only. That's usually when I feel like the top is being printed. So this is like the moves that we saw now. It was almost a little bit too expected for this to really be a top. We need to become a little bit more bullish, I believe, for that to happen.
Yeah, it'll be interesting to see what happens. I mean, not only is this 300-point move or 300-point gap is totally unexpected to me, and then it's NFP week, so it could definitely, it's going to be interesting. Dividend Cake said going up with the stairs, down with the elevator. That I've been thinking that all last week too. It's like it's kind of the slow grind up. That's exactly what we saw. The last week though, it was kind of the tumble down the elevator and then the slow and steady grind up the stairs and then the tumble down again. And so, is the tumble done, or are we gonna get another round lower, or are we gonna start right into the slow and steady grind up?
Yeah, so the US markets, they open in about 50 minutes, right?
Yep.
All right. So we're gonna have Victor coming in here in about 20 minutes or so. So he's gonna take over, and I'm gonna be leaving you and Victor for the last hour. But I'm gonna be watching here in the background to see what happens on this. Definitely interesting to see. But do you have any specific plans for a trade today, or maybe you've already gone through that? You can explain that earlier maybe, but are you watching anything specific for you, like an entry trigger to get into position here?
So typically I start trading on Sunday night, but because I wasn't feeling well, I didn't take any trades yet. Right now, at this point, we're close enough to the open that I would just wait for the open, especially because on the 15-minute, for example, we were inside this consolidation. And so I haven't taken any trades, but I will be watching to see what happens. I probably would honestly, at this point, even wait until after 10 o'clock, because the 9:30 open, or 9:30 Eastern time, at least in the US, and then 10 a.m., so a half hour after the open, we have high impact news. So to me, it's kind of best just to kind of wait and see what happens. And then, a lot of questions will be answered. So, or could be answered, right? We never have any idea of what actually is going to happen. But right now, it seems like what I'm seeing is like an upward bias on the higher time frame charts. But I don't have enough clarity just yet. And also, it's too close to the open for me. I generally want to, well, sometimes I'll take a trade at this time, but I'm not seeing enough confluence that I would take a trade at the moment. So probably my first trade won't be until after 10 a.m., so a half hour after the open today.
So I feel like the range is quite clear here. The range that you have marked out as well. Would you be trading this based on a breakout, either to the downside or to the upside?
So I would guess that when my when a trade actually presents itself according to my system, it would probably be breaking out of this structure, I would guess. That's not necessarily a requirement for an entry signal for me, but I would assume that that's probably what would happen. I would not be surprised to see a pretty explosive open today. I mean, who knows? It could go either way. But given that we had such a huge crazy gap, you know, at the open of the week, and then a pretty, you know, I don't know if volatile is the right word, but like expansive ranges in both the Asian and London session, it would not surprise me to see a pretty, you know, impactful open. So I'm not sure if I answered. I can't remember what your question was. Sorry.
Me neither. So let's
Sorry.
hope that you did give me a good answer to that question. I guess the audience will remember. They're like sitting as, you know, what are they talking about?
Oh, I know. You said a breakout of the range. Yeah,
Yes.
I pay attention to that, but that's not part of my criteria. It's just I would expect that it would probably, when I did take a trade, it probably would have broken out, because I'm looking to kind of follow the momentum. And if we stay in this range, there isn't really a strong indication that the momentum has picked up one way or another. One thing we didn't talk about was ADX. Okay, so
We had a question
ADX,
actually. Sorry, but we had a question in the comments as well on ADX, and this is not the first time I see it. So a lot of people are very curious about your way of looking at the ADX and what you've showed us last time. That was quite impressive.
yeah. So let me see if I can switch over to my other chart here, so I can show you what I'm looking at here as well. So ADX is a measure of the strength of a move in a certain direction. Do I have it up? Yeah. Okay. So if you look at the ADX on the bottom, now these two charts are the 40 range and the 100 range. So these are not time-based charts. They are based on a range. And what that means, if you remember, I think like in elementary school, do you remember doing like I forget what they were called, like, were they called like the cat? I don't know. Did you do that in math where like you measured a range and you had to like draw out?
I'm gonna be honest with you.
Oh.
I did not pay a lot of attention in school, and I do not remember that particular exercise.
Well, somebody in the chat, let me know if you know what I'm talking about. I remember drawing these like these little things, and I swear this is probably not right, but I swear it was something called like a cat or something. I don't know. Anyway, let me know in the chat if you know what I'm talking about. That is basically
if you know what she's talking about, please let me know in the comments. I would love to know.
I might need to look that up at some point. So these are non-time based charts. So the 40 range on the left and the 100 range on the right. Excuse me for 1 second.
Yeah, no worries.
Sorry. So what these charts do is they take out the element of time. So with a 1 minute, 1 minute or 15 minute or any kind of time-based chart, you get a new candle every time a minute passes or 15-minute passes. With a range bar chart, they are not based on time. They're based on the movement of the asset. So 40 in this case, I believe it's 40 ticks and 100 ticks. So when the asset has moved 40 ticks, you get a new candle formed. So takes out the element of time. So this is what I use to look at ADX. So ADX is on the bottom here. I have it in blue. And on the 40 range, it is above the minimum threshold of 20. So it's showing some, good directional strength at the moment to the downside. But on the 100 range, it's quite low. It's 12.66. That matches what we're seeing on the time-based chart where it's just a consolidation. So paying attention to ADX can be really helpful because it lets you know, especially if you're somebody who gets caught up in chop, if you know what I'm talking about, when you're taking trades and it ends up just being chop, if you add ADX to your chart, that can be a really helpful way to eliminate or at least like significantly cut back on taking trades in the middle of chop. It just is one of the wickets that helps you just stay out of that messy price action. Maybe you miss it on the chart. Maybe you don't notice that we're inside a range. The ADX can be really helpful. Yes. Okay. Box and whiskers. Thank you, Stephen. That's what I'm talking about. The box and whiskers. I knew it had something to do with the cat.
Yeah.
Box and whiskers plots. Yes, that's exactly it.
And
So
that
same
is
thing.
that's the same thing as a box plot, right?
Yes, box and whiskers. I think the box was the box and the whiskers was the tail. That's exactly it.
Right,
Thank you so
right.
much. I need to write that down because I will probably forget it. Okay, so yeah, ADX, you can add it to your chart really easily. And I have it down here, and the settings that kind of work the best are 10-10. So I can't really tell you in detail what these do, but super helpful tool that they have on TradingView to help you kind of know when, things have picked up and are moving one way or another. I also use the DXI and DX, what's it called? DXI, DI plus and minus as a directional indicator. These are also super helpful. So you can see when the negative line is on top, then it's kind of indicating a downward bias. And when the positive line, which for me is like this aqua color, it indicates a positive trajectory. And right now we just have the negative crossing over. So there's a lot of confusion here. Like am not seeing like a solid indication that there is a trade one direction or another. So for me, I'm just gonna see what happens on the open and see what happens on the open and then should have a better idea of what's coming. So I'll put it back on the regular screen.
I think those time-based, the range, I don't know how to call it, range candles or range plot. I guess it's momentum driven or not time-based. That is, it's a very interesting approach that I feel shows movement in a very different way. And I'm definitely interested in looking more into how that could improve certain systems.
Yeah, it takes a little bit of time, at least for me, to get used to it because I'm so used to looking at the time-based charts. But it kind of adds another layer of, it's like it adds another layer, I guess, for me that really helps quite a bit because especially when you get something like this is a lot of movement that really doesn't mean anything because it hasn't gone anywhere. So when you're looking at the non-time-based charts, I don't know what you call them either. The range bar charts, it kind of takes out all this, wiggles and jiggles that mean nothing, and kind of consolidates it down. And so I think it's really helpful. For me, I still look at both. Because I think both are helpful, but it does add a layer. So if you do end up adding ADX or you do end up adding the non-time based charts, let us know because I think it would be cool if people start using them and find it helpful. I think that would be neat to hear from others.
Yeah, I think the only issue I have is time. It requires time to do all the testing and all the back testing. But I do look at I do use the ADX in my trading quite a lot to determine a. Well, I would say that I like looking all these different indicators, but the moves that I'm looking for and most of the moves that I'm seeing is also quite visible just looking at price. I mean, price has most of the things that you want. I mean, you can add the ADX, and then the ADX will tell you that, you know, there's a chance that this market has a strong trend move, but you can also look at price and say, yeah, it has a strong trending move because it has higher highs and higher lows, and it has momentum. But it's quite interesting. One thing that I've started looking into is adding a moving average onto the ADX. So a moving average of the ADX, because the ADX is still ADX is a smoothening of the D plus and a D minus, and then if you add an EMA on that, you can look at the crosses, the bull and the bear crosses, with the ADX crossing below or above the EMA, and that can actually create quite interesting signals, which logically it shouldn't, but it does give some interesting signals, and actually something I'm trying to put into putting it into an indicator and back testing it in an algo. We'll see how that works out.
Yeah, that's interesting. I hadn't thought about using a moving average over the top. Now, does the moving average incorporate the DI lines as well? Is that what you said? That it's the ADX plus the DI?
Yeah, so I'm going to show you the thing with TradingView is you can do so many different things. You can if I add, so you see I have the is this the ADX? I believe. Yeah, that's the ADX. So what I can do is you can press the 3 red bars here, and then you can add indicator on the ADX. Then you can go in and can add an EMA on the ADX, and then if you go into EMA, you can add, for example, you can add the 1. That's a bit too fast. Let's do the 12, and we can look at the signals. Then this would the signals would then be the ADX dropping below the moving average. But then you have to look at the logic behind the ADX is that a low in ADX does not mean a low in price, because the ADX is only showing you the strength of the move. So whenever there is a strong move to the downside, that should also mean an increase in ADX. So, but it doesn't here for some reason, but that's the idea, right? So if you look at every time the ADX is crossing below the EMA or vice versa, you potentially could be looking at, for example, if you were using this trading at support and the ADX crosses above the moving average, that's a buy signal, and then vice versa, it would be a sell signal up here. And statistically, that there's definitely, it's interesting. Just looking at this visually, it gives certain ideas. You can also, measure this by, can filter out signals by adding the MACD and things like that. Something that I'm working on, I think might be an interesting use case that traditionally it's not really how we use the ADX, but then looking at it actually works.
Yeah, that's interesting.
So yeah, it's gonna be interesting to see. Yeah, exactly. So what Andre is saying, you're creating an ADX momentum indicator. You're measuring the rate of change of trendiness, and that's basically what the ADX is doing without the EMA. It's just that the adding the EMA just gives a gives a good visual cue on where the trend is ending, which is quite interesting. I'm gonna move back to your chart.
That's the thing about TradingView. There's so many things that you can do, and again, saying what I had said before about just like trying everything. It's kind of like back testing is really helpful. to a point, but that's where you can really accelerate your learning is by discovering something like you've discovered and then taking it to forward testing, whether again it's paper trading or with a prop or whatever, and just trying everything and really investing in that, and learning from really what does work, and how can you utilize a tool like what you just described to make it feasible for you to have a strategy from.
Yeah, there's really no right and wrong when it comes to technical analysis. There's only either you make money or you lose money. There's just no right and wrong. Okay, we got Victor in the background. I'm gonna let Victor take over here, and I'm going to be back. I'm gonna be back tomorrow. I have my segment tomorrow morning. On Tuesday, we're gonna be talking about technical mastery. I'm gonna show you some trading systems that I have and how I use my technical analysis. Victor, is it okay if I bring you on? Oh, there he is.
Here I am.
All right.
How is everyone doing?
I'm gonna
Hello,
leave you
Dr.
two.
Diana.
And sorry, I'm
Yes?
just gonna jump off.
Go ahead,
guys tomorrow.
Jonathan. Thank you for everything you've done for our community today. Thank you.
Thank you.
Bye.
Bye bye. How are you doing, Dr. Diana? I understood you are feeling a little bit under the weather.
Yes, I am. I am. It was a long weekend, but I'm glad to be here. How are you doing?
I'm in the same boat, to be honest.
Are you really? Oh,
Yes,
I'm sorry to
but
hear
it's
that.
no, that's okay, no problem. The thing is, once I start trading, I don't feel anything. That
Oh,
doesn't
that's
happen
good.
Yes, it doesn't happen all the time. Sometimes it doesn't matter if I'm trading or not. But today, for example, I didn't feel that well before I started trading, and it never occurred to me that I was feeling, less well before. And as soon as I took a little break and I start feeling, you start to become aware of, everything else. And I said,
Yeah.
oh yes, I was feeling a little bit not optimal. But it's
Yes.
funny. It's funny because once you start focusing, you forget about. Well, I do sometimes
Yeah.
about the rest.
You're in the
So how was your
flow.
trading? In the
Uh,
flow, exactly.
yeah. That's exactly what it is. Yeah. I know. Aren't we so lucky to be able to do something that, is so enjoyable that we can have that experience where you can't even tell you don't feel well. I'm still feeling it today. So I'm not quite there yet, but
Yeah,
I
it
haven't
doesn't happen all the time to me. But go ahead.
yeah.
Sorry.
I haven't taken any trades yet. We have the open in right around a half hour, and then in an hour from now, there's high impact news at 10 o'clock. So manufacturing PMI at 10 o'clock. So I am gonna kind of keep watching things, and now we're kind of a little bit too close to the open for me to want to take a trade unless there was like a perfect setup. And we just looked at ADX, which is quite low on the 100 range. So for me right now, I am just kind of waiting. Haven't seen anything yet this morning, and just holding off. How are things going for you?
That's good. Before I answer your question, you're watching the Nasdaq. I see on your screen,
Yes.
right?
Mm-hmm.
Okay, so I will put mine as well.
Mm-hmm.
I haven't taken a trade this morning. I said I start trading, but that doesn't mean necessarily that I'm actually in the trade.
Mm-hmm.
Start looking for a trade, start analyzing it, and waiting for that entry to that opportunity to come up. Let me see. Okay. So I haven't taken any trades. I will go over the opportunities that I saw earlier today later on. But basically we had a huge move. I mean, unless you have been, not you specifically, Diana, but I mean anyone, unless you've been under a rock, you could have missed that huge gap that we have experienced starting today on the forex pairs. So it's and I think also on Nasdaq as
Yeah.
well. Yeah, I heard you you had we have a gap as well on Nasdaq. Is that correct?
Yeah, I think it was about 300 points when we measured. It was right around 300 points, which is huge, massive.
It
We're
is.
still on
It
my
is.
chart, by the way, if you're trying to put your chart
No,
on.
no,
No, it's
no,
okay.
that's okay. It's okay. It's I wasn't. I was just put my chart on to to start in the case I wanted to show something. But yeah, maybe I should. And you guys were talking about the ADX, and that's something you use a lot. I understand. Is
Mhm.
that correct?
That's correct. Yeah. I
And you
rely on
use.
that. Mhm.
Mhm.
I use that to help keep me out of chop and to understand, when there is actual directional movement versus when we're just kind of chopping around. So yeah, I rely on that pretty heavily.
I see. Um, the and do you only use it to filter out moments to be trading, or do you use it for something else like holding a trade once you're in it? Do you use it to time your exits, or not?
That's a good question. I only use it for entry. So kind of like a red light, green light when it is above the 20, the minimum threshold of 20, then I consider that a green light to go ahead and look to see if there is a trade. And then after I've entered the trade, I don't do anything with the ADX or any signal for that matter. I just enter the trade, and then I have my take profit and stop, and then I'm just waiting for it to get hit.
Nice. So you don't use it for trade management, just to be selective on your entries, to know when your entries have a better chance of succeeding, basically.
Hmm. Correct.
Nice. All right. So I let me see. I let me show perhaps my chart to see what we can get an update as to what I was looking at before. Let's see. We have. I'm going to show my chart in a little
Okay.
while. Actually, right now, right away. Um, we have previously we've been looking at the H4 order block that was created in the morning, right? And the bearish order block, bearish structure, which has been invalidated, meaning that the market, whatever that caused that structure to be created was broken and is no longer valid. So basically the whole setup, which was hinged on the fact that the H4 order block was created, is now off the table. And it brings us in the same process, it created a new one, right? And it may sound different, not difficult, but it may sound not weird, but perhaps not very typical, to know that I keep switching sides depending on what the market is creating. And maybe it's something that helps me unconsciously, but it helps me being flexible, because I'm just following whatever price is doing. If it's forming a bearish structure, I'm gonna go with that flow, as long as it builds the rest of the setup, and I enter. And if it's stopped building it or even invalidates it, I never enter. And but it sometimes it can have both direction at the same time, and I take both of them, and it's not you know intuitive, because you're going against yourself, basically. But that's how it works. And in my back testing, and I've had much success with it as well. So that's the way I trade. So I saw it, that it is profitable doing this on back testing, and I start using it, and that's how I trade. So using both of them at the same time. All right. So let's see. We have here. Um, all right. We have a new fresh order block on the H4. And let's go to the lower time frame to see if we have any reasons to look for an entry. And we don't really have anything. Let's see. That's the open. The open is 30.6. Open here, or the close, I should say, is 43.8. And there is an order block there. It's no longer fresh. The first one and the second one, 43.8. It's the same. Actually, there is a little entry order block here that could not entry, a fresh order block on the 1 hour. So this is how I usually trade. I use the structures that the market is constantly creating, and I use them to identify areas that are likely to be used if the market is going to reverse. So the whole idea is that market, if we're going to have some kind of continuation to close those gap that was created at the beginning of the session on Sunday in the US, then we could use this area as a possible area to reverse from, and that's where I would want to have my trade. If I go to the 5 minutes and to see if we can refine that, we let me see if that's a valid entry to be taken. 12.3 and 12.9. Actually, no. So I don't have a quasi there, so I'll have to wait for a new structure to be formed. I don't have any entry order block on the lower time frames yet. I'll have to wait for price to come back into this area. If and when it does that, and perhaps forms another quasi, and there I would be waiting for my entry. If it happens, maybe during our session, we still have about 50 minutes to go. We can take a look at it. But what I wanted to show was that the gap on GU has already been almost closed. Right, this is the gap on at least an OAND feed, price feed. We had the gap has been almost fully closed. This would be the gap, right? And it is just a little bit is still missing, but quite differently from compared to EU. We did have a partial close on that gap. I see here I have a TP, but it never triggered, right? I never got into the trade because that's where I would have entered. EU making closing that gap as we are basically as we're speaking. So those are the two pairs that I've been watching today, and they haven't triggered anything yet. We also looked at Bitcoin. Let's see, Bitcoin. We identified an area where we could see some reaction from it. This is the H1, and actually we're coming very close to that area, so that will be interesting. Let's look at this is the 50-minute, but it's also an H1 order block, right? So it's a little bit tighter right there, and this is the area that I would be looking for to get a long from it. If we are going to, close higher, close that gap, although on Bitcoin technically you don't have a gap because it's open 24/7. If we're going to reach anything above, if we expect that, and we could consider that because we have a daily order block as well, right? It exerts some upwards pressure on price. So we could expect price coming in from above. Let me indicate that just a little while. We come from above, hitting that supply area, or demand area. We move out of it again, and it doesn't not infrequently it comes back to the same structure before it continues, and that could be something it might be doing. And if it were to hit that area that we're indicating here, where both of those order blocks overlap, that would be a great area to get an entry. You could also only take it on the H1, but where you have an overlap, it's much clearer. Actually, it's the overlap is on the 1 minute, both of them. So I should actually, there is no overlap. It's just the same time frame. That's the freshest order block. So I stand corrected. It's not an overlap. It's just an H1, a newer, fresher H1 that is reacting upon. So that is something that I could be looking for an entry long, going to the lower time frames, finding those areas. Dr. Diana, what would you say, changing subject here, what would you say is the breakthrough moment for you when you started trading in terms of psychology? What realization did you come to that said, man, before and after I realized this fact or this thing about me trading, my trading changed completely? That
Yeah.
aha moment. What is it?
Thank
Do
you
you
for
have
your sharing your analysis too. That was really interesting. And last week you pretty much nailed it when you were analyzing the Nasdaq. I thought of you after I watched the day play out and thought, wow, that was really impressive. So thank you for sharing that. So for me, the aha moment, so to speak, was I was trading with the 5ers, and this was a couple years ago, and I was passing challenges, and then I had a system that was, I felt like worked really well, but when it didn't work well, I was sort of unraveling. Meaning, when the going was good, it was easy, and then when I encountered any kind of obstacle, it just kind of disintegrated. And I thought, there's something here that I'm missing. I'm not quite able to put my finger on it, but somehow I need some help. And so I reached out to someone, and it was kind of funny that this was a professional trader, and the help he gave me was psychology help, which I thought was a little ironic, because I thought, okay, so that's a little bit wild that I didn't see that myself, but I just had never really thought of the actual practical implications of incorporating psychology into trading. Like I had heard people speak about it, but I didn't really understand how to make that a part of my process. And once he helped me and kind of like highlighted to me, like, look, you've got a system, you understand risk, your psychology, have you given any thought to that? It was kind of like, it really was a light bulb moment, like, oh wait, I know how to do this stuff. I understand psychology and how I can use it to my advantage. I just wasn't. And where that came into play for me specifically was the fact that how your thinking shapes your emotions, and how your thinking impacts everything you do as a trader. So if your stop gets hit, what do you mentally think about that? If you take a series of losses in a row, what do you think about that? If you're struggling with those thoughts, what do you do about that? And those are the elements that really can take a system that should be profitable, a system that should work, but you struggle with and it isn't working. That's what ultimately helped me get to the next level. Somebody asked about my YouTube link. It's the handle, it should be Dr. Deanna Cole. I've changed it a couple times, so sorry about that, but it's Dr. Deanna Cole on YouTube if you're looking for that. So yeah, I think that was the big aha for me. And the reason why, looking back, I know that was the case is because when I was losing, I remember specifically I had a 5ers challenge that I passed, and I lost it. I lost the account. And it set me back so much mentally. I was shaken. And the same thing had happened to me in 2018 before. I had never heard of funding at that time. But I was trading my own capital and it was going great. Everything was excellent. I was trading stocks at the time. And when the going was good, it was great. And it was when I hit, kind of a thorny patch that I would just completely fall apart. And it was the down periods that I wasn't able to cope with and wasn't sure, what do I need to be doing in these periods? Because any system is going to have, challenging periods or periods where it doesn't do as well. And so that is inevitable. You can't avoid that. But how you deal with it or how you cope with it is where, the importance is. And so that was what it was for me, was really figuring out, when the going is not good, what do you need to be doing to make sure that you're not creating further damage to your psyche and to your ability to continue on and power through those rough patches.
And the revelation was that you need to do something with your thoughts, right?
Yeah, just somebody asked
Using
me. Sorry, go ahead.
No, I was gonna elaborate, but go ahead.
Someone had asked me last week, they said something to the effect of, after I take a winning trade, I always take a losing trade. Is that my psychology? That's a really good example of something that makes sense to us, but actually, if you think about it, it really is not. See if I can say this correctly. Like, it's that doesn't actually make sense, because any system, unless you have like a 90% win rate, 99% win rate, of course you're going to have series of, win loss, like that makes sense. It's not your psychology, but knowing how to like talk yourself through those periods of difficulty, checking your thoughts to make sure that they're serving you at the time.
And and how do you do it? Because I'm a huge proponent of what you're suggesting, to get a hold of your thoughts, grab the bull by its horn, which is your
Mhm.
thoughts. They're going to drive other things, your habits, your behavior. But how do you do that? How do you grab that bull? How do you get a hold of it?
Mhm. I think there are a lot of things that you can do. So I'll say one thing and then I'll cycle back a little bit. So for example, for most traders, one of the things that is really hard for us is taking a loss, accepting a loss. And for me, it can be really helpful to, in those moments when I'm about to take a loss, or it looks like I'm going to be taking a loss, to do a couple things. First of all, if the trade is going against me, using my body to send a signal to my brain. So you've probably heard that smiling, even when you're not happy, can tell your brain you're happy, even if you're not happy, right?
Mhm.
Your brain can't tell the difference between genuine smile and a fake smile. So you can use that to your advantage. Likewise, sitting up straight, shoulders back, head lifted in a position of confidence tells your brain, using your body tells your brain, oh, she's confident, she's fine, she's calm, she's relaxed. And your brain doesn't know that it's fake confidence or false confidence. So when you're in a situation where you are maybe in drawdown, or you are, headed towards your stop loss, you can do that. Sit up straight, head lifted, chin lifted, maybe smile, and that will help your body say, okay, we can be calm, we can be relaxed, we're not in danger, nothing's out to get us. Another thing that I do as kind of I guess you can call it like a mantra, so to say, um, this is a valid trade. Every trader takes a loss. Losing is part of the game, and I have to be okay with losing if I want to be a trader. So kind of speaking to yourself during that, excuse me one second. Speaking to yourself positive things that are going to help you remember and recall that losing is just what we do. That is a significant part of what we do as traders, and we have to be okay with that. If you are not willing to be okay with taking losses, it will not work. You have to be okay with taking losses, because every trader, no matter what they say on social media, every trader takes losses often. I mean, my win rate is around 50%. So I take about as many losses as I take wins. And so you have to find some way for you where you're going to be okay with taking losses. The other thing that you can do is I break down kind of my psychology focus in 3 parts. So before the trade, during the trade, and after the trade. So we kind of talked about what I do during the trade. So, using your body, using your thoughts to keep yourself in the right spot. But you can also do some things preemptively to make sure that you are in your best, in the best position that you need to be. So these can include kind of like some deep breathing. You can do that during the trade as well. Deep breathing to make sure that your nervous system is calm and relaxed. It can take, a minute, it can take 3 minutes, whatever you want. even just like 1 or 2 breaths while you're in a trade can help quite a bit to calm your nervous system and get yourself in the place that you need to be. You can go on my YouTube channel. I have a bunch of videos on this where you can work on visualization. Visualization to help you, especially if you're struggling with accepting losses and being okay with losing. You can do some things to visualize yourself in that situation in a losing trade and practicing before it happens, practicing how it is that you're going to deal with a loss. So, what would be the ideal way for you to take a loss? Practice that and see what that looks like, and then see if you can incorporate that when you're actually in a losing situation. And if you're anything like me, sometimes when the wins come too easy, that can be an issue too, right? I can get a little bit too confident, a little too cocky. So, also practicing how are you going to deal with the wins as well, so that you stay very balanced. A lot of times you'll see on social media, people are like super celebrating wins, or sometimes even like super reacting to losses. And as actual true professional traders, that is not helpful to us. We want to stay very level, very balanced. Of course, we're happy when we get a win. Of course, we hate taking a loss, but that's, not serving us. We want to stay very level, very calm, very neutral. So that happens before. We already talked about during and then post. So having a post trading method to deal with your psychology. For me, it mostly has to do with taking my dogs for a walk, thinking about the trading day. My husband's a trader too, so we'll talk about our trading day. You can connect with other traders even online through Discord, or maybe you meet somebody in the chat, however that happens. And if not, you can do it by yourself. Take your dogs on a walk or whatever it is. And I just think about like, okay, what did I do well today? What do I want to do better? We talked about this last week. The journaling method that I recommended has worked super well for me, which is really focusing on your strengths, what you do well, and really, really getting to know what your strengths are. And that can happen in your post trading reflection, thinking about that. And yeah, those are the three things that I think are really helpful.
Nice. You gave us a lot of good information there, Diana. I think looking at the messages in the chat, the reactions we get, a lot of people are, and that's not surprising, a lot of people are dealing with the psychological part issues of trading, and it's not easy. It's not easy because a lot of times it's not something we know from other professions how to do, right? Normally you learn how to do a craft and you do it. There's not another level to it. Normally, I mean, high performance athletes have these psychological level that they need to control besides the physical things, but that's exactly what we have to do as well. And it's a whole new way of working, because in the end it's kind of a job, right? We come here, we put in the hours, but it has a different depth compared to other occupations. You mentioned, so basically, I think I missed a few things, but you said basically we want to be tricking our minds with our facial expression, smile, our bodily posture, straightening up, sitting or standing up straight, and our words. We verbalize some mantra, and we will be hearing ourselves. And by doing so, we trick our mind into thinking, that we are confident, even if we're not completely that confident yet. But the body will, our mind will react. We will have an effect on the mind just by doing so, right? That's the underlying idea. And then you said you broke down the pre, during, and post session. On the pre, you said relaxation techniques and visualizations, right? And did I miss one? There were two, right?
um I think I only mentioned two. There are more things that you can do that I have on my YouTube channel, but I think I only mentioned two. Another one that you can do is really thinking about your goal for trading. I didn't mention this before, but thinking about what is your goal for trading. So if you think about it, of course we want to be the best trader we can be, and we want to do that now, right? But really focusing on one thing can be really helpful. So what are you going to focus on this week, and keep that goal for at least a week? So for example, if you've decided that over trading is, or let's actually pick a better one, moving your stop loss. Maybe you really struggle with moving your stop loss, and you do that on a regular basis. So what you can do is say, you know what, this week I'm really going to focus on that. And that's the only metric that I'm going to judge myself by. So whether I am green for the week or red for the week, it doesn't matter. My success will be based on whether or not I moved my stop loss. And if you go for an entire week and you've done better, or maybe you've done perfect, that's great. You can move on to the next week and do a new goal, or maybe you need another week to keep working on that. But that's another really helpful pre-trade thing that you can focus on as well. But yes, you got
Nice.
it.
So basically, a goal-oriented week, like have a theme of a week where you're focused on only one thing to improve, and you only move on after you have successfully or with satisfaction prove to yourself that you can you've overcome that issue. Great. And during, I'm just doing this to get a system, like a review of everything you said. And during, you said to keep our emotions leveled, right? Doing things, visualization to keep our emotions, and awareness to keep our emotions while we whether we lose or whether we win, to keep us leveled. And I think that's very very key. I've seen that in myself and in other traders as well. The moment we think and we feel like we're invincible, we got this figured, we are going to make all this money, all these profits. That's the moment that we tripped and start the drawdown. It's so typical. And it's about the being overconfident and losing sight of what made you a good trader. The good performance didn't come from overconfidence. It came from meticulously following your plan, having a leveled emotional state of mind where you're not too excited or too suppressed in any other way, but you have leveled. You are leveled, and that is what made you make those profits. And once you start deviating from that, it becomes obvious that you're no longer trading and making the same decision. So great stuff. And the post you said about your journaling, right? Journaling, focusing on your strength, relaxation with, you said, your dog in your case, or some other activity that is relaxing to that person. Great stuff, Diana. I really, really love it. I think it's a lot of value for everyone who wants to be a better trader. So are we are is the I think the the market has opened, right, on the
It
Nasdaq.
has. Yeah, it has. Actually, and
Would
I
you like
wanted to,
Yes,
sorry, go ahead. I just
would
wanted
you
to
like to go ahead.
you go ahead. I'm gonna there was a comment in the chat, and I so I'm just gonna scroll back, but you go ahead and I'll see if I can find the comment, and then we'll address that.
Okay. All right. All right. I'm gonna look at the Nasdaq. Actually, I think Diana would perhaps like to do so as well later on. But I will be looking at it from my through the lenses that I interpret the market, which is of course different than anyone else. I'll start from the weekly. I'll do it very quickly while Diana looks for that chat. Um, let's look at, we are currently in fresh order block on the Nasdaq, bullish fresh weekly order block, and we are also we created last week a new new fresh bearish order block. I should take out these, not take out, but make them smaller because they're still valid, but they're not the freshest order block anymore. And I mentioned this earlier for those who may or may not have been with us then. We want to be trading the freshest. The fresher an order block is, the more price will react to it, and it's logical because it's more recent. More people would have it in their fresh memory, that those levels are relevant. So we have a fresh bearish order block as well as a fresh bullish one, which is being retested right now. So both of them can offer us opportunities on both sides. That's my idea, or that's how I approach it. So I would be looking for alignment, and if I find those, I'll be looking for shorts from this structure and longs from the structure below. It's very simple. Supply and demand basically idea behind it, nothing too fancy. We go to the daily, I'm sorry, and the daily showed us a possible reversal through the creation of a reversal pattern. We talked about this Monday last week, where Diana called out this area to be a great area to be long. She took a trade here, very very nice one, I may add. And that was the reversal pattern, and we're getting back in the same area. Right? The second time around, a structure is tested, typically it's less strong, right? It's weaker in its ability to push price, to change price direction. However, it's still valid in my book. The quasi entry order block is not is not subject to freshness, right? So it doesn't matter how long it takes, as long as it's still valid. It is still standing, hasn't been invalidated. It's still valid to trade from. So I have that order block here, and we are getting into it right now. Let's see. We have the let me check something. Yeah, so we have that's the daily order block, which is below us on the quasi. I'm gonna change the color because it's an entry order block on the daily. We go to the lower time frames, and we haven't reached, as we did last time, a relevant area to be trading from, right? Last time we did come into this order block and even to the lower one, and I was very keen on saying that, to me, that was a very nice entry area because it's doing it's tapping into different structure on different time frames, daily and 4 hour, and it did react very nicely from that moment on. However, with that gap, what I see here is that it hasn't reacted upon any structure we have seen in the past, existing quasi entry order blocks, but it has reacted on the top border of that daily order block, right? And I don't trade those, but it's very common that the orders, the borders, the upper and the lower borders of those structures, they get reacted upon, and we see this all the time. And I would, if anything, I would be interested in price coming back into this area and taking a long from there. Other than that, I wouldn't go to lower time frames because I, of course, use the H4 as the basis of my setups. So if anything, I would be looking for something like this, price coming back into it, might even squeeze a little bit, doesn't matter, as long as it doesn't invalidate it on the H4 with an H4 close. It might be something like this, and that's fine. I'm taking liquidity for everyone who's have their stops below that swing low, for perhaps a deeper correction. And I say this because of that daily order block. Although it's not as strong as the first time around, it's still there, still valid, and price action is telling us by forming that bullish H4 order block right there, telling me that this structure, the daily, is still relevant for the traders who are trading it. So I wanna be doing what is relevant, using structures that are relevant. So I would be doing something like that. I wouldn't be going lower time frames, but perhaps this could be something on 1 hour, comes back into the H4, and that could be something. But it doesn't seem like it's interested in retracing that much. That would be my take on Nasdaq.
Yeah, I think
Did
that's
you find
excellent.
the comment, Diana?
Yeah. Yes, I did. Thank you. That was excellent, though. I
Thank you.
appreciate hearing your thoughts. So a couple things. So Alex had said, I'm at 85%, referring to win rate, but it came with a caveat, negative RR. And I think that's an interesting comment because the truth is any win rate can be, you can have edge with whatever win rate. And sometimes having a higher win rate can be advantageous because then you don't have to deal with the psychology behind losing as often. You still do. So you still need to be comfortable with taking losses because even with the 85% win rate, you will take losses. But it's a trade-off, right? That's always the case. And then another comment says, I need to learn to reduce my losses. On my last 2 challenges, I had 88% and 93% win rate with 22 and 30 profit factor. But when I changed to intraday on loss is catastrophic. So I'm not sure about this one so much. 88%, 93% win rate is super duper high. And so you can think about, I need to learn to reduce my loss. On my last 2 challenges, I had 88. I'm not sure about reducing your excuse me for 1 second. I have to cough again. I'm sorry.
No problem. Take your time, Diana. What I would say is, go ahead.
I guess the idea here is that any win rate can be okay. It just it depends on the rest of the system together and how willing you are to accept losses, which you need to be able to accept losses. So I would wonder if maybe there is something else going on there. And then good morning, Marina. Great to see you. Thank you so much for joining us. All right, let's see if there's any other here. Yeah, there's some really great comments. It sounds like people are resonating with some of the things that we're talking about, which is great. And I think I'm caught up here. Last one is, my problem is when I enter in loss, I let the loss run instead of close. Okay, so I'm guessing you have a really high win rate. That's what you said, is you have a really high win rate, but then you probably take very, very large losses from time to time. And so it kind of like levels out. So my suggestion there would then be to really work on what we've been talking about, is becoming a little bit more comfortable with losses. So one of the things that I think is really is interesting to think about is your stop loss size. So for example, if you have, let's say you use a 10-point stop loss, that's probably really small for what you're talking about. But let's say you have a 10-point stop loss, and if price hits your 10-point stop loss and then moves on, right? Versus if you have a 30-point stop loss, if it goes 30 points and then goes to let's say you have a 30-point target. So 10 points down and then has to go all the way back up 30. So that's 40 points, right? Where it would have to go to get to your take profit. If you had a 30-point stop loss, and let's say it made it almost down to your stop loss, but didn't quite hit it, and then it would have to go all that way back up to break even and then 30 points more. So in that case, wouldn't it make a lot more sense to get stopped out at 10 and then take a re-entry when the time is right? You could have actually 3 attempts in that case versus that one. To do that, though, you do have to be more comfortable with taking stops and accepting what that means, right? You have to think about, what does the stop mean to you that you're so not wanting to take a stop. And so really thinking about what that means and see if you can rationalize something that's a little bit more helpful. So thinking about it as an insurance policy, or if I get stopped out here, I can always take a reentry and see if that can help.
That's a great answer, Diana. Breaking down the trade into three attempts, before, breaking down the risk into three, it may give you a better, lever, right, to navigate the loss better, right? Before you put the second one, you're actually waiting perhaps for some signs from price action, or maybe some indicators, whatever it is that you're using to get into the trade, before you put on the rest of the risk. It makes a lot of sense. I truly think it is. We have a question here about someone, Chris FX, asking, should I buy a funded account or grow my $50 account?
Well, I think, a $50 account is that's going to be a little bit difficult, because you don't have a lot of range there, to a lot to work with. So, it might be a good idea if $50 is your budget. It might make sense to spend some time forward testing on, for example, TradingView. If you have a TradingView account, you can do it for free. It might make sense, if that's the amount of capital that you have available, to spend some time forward testing, so that you can make sure that when you are, growing or doing a prop firm, that you have a little bit more leeway. Sorry, is that me? You have a little bit more room to grow. Sorry, not sure if that's me or not. And so if I was you, I would probably wait and spend some time forward testing, and see if you can save up some money to have a little bit more room to work with, and then reassess if it makes more sense to do a prop, or to grow your personal account.
Yeah, I would say indeed, the $50 is not a lot of capital. In comparison to, prices of prop firm. Typically, they are around $50. They're entry first ones, smaller sizes, but most of them are a little bit more. So the other thing is that $50, you shouldn't see it as, your trading capital, as in, this is going to be the account that's going to make me thousands per month, and I'm going to live off of it. You shouldn't see it. Why? Because $50 is simply, let's be honest, it's not enough. You need capital to make capital. So if you're trading on a private account, $50 is very difficult to make much of it. So you, rather in looking into growing that account, that $50 account, what you should be looking is, what can I do with that $50 that will teach me the most? And that may be different from everyone. Some people will learn more from taking challenges. Other people will, will get a lot of benefits from doing, forward testing free on TradingView, or on paper, on whatever, software that you can get your hands on, sometimes for free, without using your $50. Besides, before you start, putting that $50 at risk, because if $50 is all your budget you have, you gotta think, 3 times before you put it to work. I would say hold on to it for a little while. Make sure that you're able to do other stuff before you start using, the limited capital that you have available. And perhaps even, I know it sounds boring, but perhaps while you're doing, the back testing, the forward testing, and everything else with very little to no risk, build up some savings, build up some, a couple of hundreds at least, if not a couple of thousands, so you have capital to learn, because you need money to learn this craft. It's very difficult to do it completely with, very, very little budget. it's going to cost you at the beginning. It's going to cost you more than it's going to, for sure, that it's going to produce. So yeah, that's what I would say. Great great answers. We have a lot of people asking a lot of questions. We have um, Vinicius is actually giving some advice to our friend Chris FX. Definitely, on my opinion, is buying a funded account or a prop firm account. I trade much better with rules to following. Well, that's there you go. You got a someone with same with experience with the type of situation you just explain and giving you some good advice. I think that's a good advice as well.
Yeah.
We have,
And I agree.
we have many
sorry,
many messages in the chat. Go ahead.
I agree with that. For me, it of course depends on what you have, what money you have to spend. If you don't have money, you don't want to get yourself in a situation that is going to be detrimental. But I agree with Vinicius. For me, it was most helpful when I was in a funded account and doing it that way, because to have some structure was really helpful. Some structure and requirements on what you can do and what you can't do. And also, it's a lot cheaper than losing, if you're trading a personal account, you can lose a lot of money very fast. And with a funded account, you are limited, your downside is limited to whatever fee you pay, and that's it. So even if let's say it's $100,000 account and you have, I don't, not sure what the loss is on $100,000 account, but it's several thousand. But it only costs you a couple $100s to pay for that. So that can be a really, really great way to learn, and that can be part of your tuition that you spend, and that's a great way to do it. Feels a lot more real than it does when you're paper trading, even though that can be very helpful as well.
Yeah, it may be difficult for people to take it seriously, right? Because they don't have, with paper trading, they don't have skin in the game, right? They can just forget about it, throw away the paper, so to speak, and it's all over. They haven't lost anything except time. And with buying prop firm accounts, you actually have something to lose. You've paid a fee, so it hurts a lot more than just the thought that you didn't make it on paper.
Mm-hmm.
We have someone in the chat that has some difficulty verifying their account on Discord. I don't know exactly your case, Wendy, but if you enter the server, there is going to be a first announcement with some house rules, some guidelines. You have to react to that with a thumbs up. And automatically, after reacting with that thumbs up, the rest of the server will open. If you have anything else, if it does that which I just explained doesn't help you, please reach to us on the live agents on the website. They will be able to help you further. And I'll see you on the other side, Wendy, when you get your account verified, because we will be having Discord session shortly today after our YouTube session. Another one, I think this is a great question from Andre, asking, how would you transition from simulation to live trading from a psychological perspective? Do we have enough time, Diana? Because we only have 8 minutes, and this question, I think, deserves some good amount of time, because it's a very good one.
Yeah, this is an interesting question. I honestly, no one has ever asked me this before, so I need to take a moment to think about it. How would you transition from simulation to live trading from a psychology perspective? That's really interesting. The first thought that pops in my head is that I don't think I would do anything different, except troubleshoot. And so if you're in simulation and things are going well and you feel like you have a grasp on what you're doing and that you're ready to transition to live trading, I would just go ahead and do that and continue to, kind of circle back and check in with yourself. Most likely you're going to find that things are a little bit different one way or another in live trading versus simulation. But of course, it's probably pretty likely that you may not be able to anticipate what new things might come up for you. Maybe you would, if you maybe you have certain challenges in simulation that you're aware of, and then maybe they'll might get worse in live trading, and so you maybe would be aware of that. But I would try and set myself up for success by making sure that my psychology game is on point in simulation. So the things that we talked about, the pre, during, and post trading exercises, and especially focusing on the things that you can do when in an actual live trade, and then just slow and steady go to live trading, and then just continue to evaluate. So we talked about before how when you're trading, let's say you've been trading for 25 years, your risk and your edge or your system may not have changed, but even after 25 years, your psychology is still kind of fluid. So if you've had a fight with your spouse, or your kid got into big trouble and you're upset about it, or you have a parent that's really sick or something, those things can all impact your psychology regardless of how long you've been trading. And so you have to cycle back and keep checking in with yourself and keep working on that. And, sometimes it'll be easy and smooth sailing and you might not have to do a lot, but I would not do anything different. Just keep checking in with yourself and making sure, you're being an asset to yourself rather than a hindrance or creating an obstacle for yourself. That's a really great question. And I think the fact that you're asking that shows a lot of insight into your psychology. So kudos to you for that. That's great.
Yeah, it is, because it is a thing, right? When the thing is, we as humans, we behave differently according to the situation, and the situation in simulation and live trading, it's different. It's the same strategy, the same market, but we feel differently and we act differently, we think differently, because of the situation is, the circumstances are different. So it's I think it's very wise to recognize that you're going to, you may feel differently, you may want to act differently, but should you, right? And that's exactly the question. We have about 4 minutes left, and we have a list of very, very good questions that I'm sadly think that we will not be able to take them all. For example, we have Deepak asking about overtrading. We have another Andre asking about paper trading, well, it being a great asset or not, should it be used or not. And we have another one. Let's see, I think we have a couple of more. In paper trading, do you think paper trading has a place in a trader's development?
I think
Diana?
I think it depends on the trader. So for me, I had shared that the best what propelled my success the most is when I just said, okay, I'm going to just trade. I'm going to trade as many trades as I am going to trade and do whatever, but it was on prop. And and I knew it was going to cost me some money because I was going to fail challenges and I was going to take trades that I shouldn't take. And I did that deliberately, knowing that I needed to touch the stove to know that it was hot, that type of thing. For me, if I would have done that as a paper trader, as paper trading, it wouldn't have had the same effect, because even though prop trading is virtual capital, it feels more realistic to me. I feel the sting of a lost account more than I do if it is paper trading and the account just gets reset. But that's very much based on the trader and what money you have accessible to you. Like if you don't have money that you can put into your trading, you need to stick with paper trading. But if you are in a situation where you realize you do have some money that you can contribute to your trading education, I think that prop trading was the best way for me to do it. I could have done it with my personal capital, but, again, you can lose a lot of money with your personal capital by doing that. So for me, that wasn't an option. I didn't want to do that. but I felt okay doing it with prop capital, not prop capital, but like a challenge account. And so I don't think that paper trading, I don't think I could say that it doesn't have value. It could if you can't afford to have more challenge fees, then do paper trading and forward testing with that. But if you are at a level where you feel like you could have some fees, that that's accessible for you, then I do think that's a better option. But it really depends. It depends on you as the trader, and you have to make that decision for yourself. I don't think that I could wholeheartedly say that paper trading is of no value. I just knew for me that it doesn't feel as real. That doesn't mean there's not value in it. It just didn't feel as real to me, and I thought it was worth a couple $100 or however much it was, to go ahead and do that through prop fees. But I mean, it just depends. So
Yeah, I think it's everyone. Everyone, we're all different, and what works for one may not always, be the best for the other. And I think paper trading is it may not be for everyone. It may not have the same impact, but it has its place for zero risk, trying out things without doing backtesting, because backtesting you can play along with time, and with paper trading you're actually trading, just not placing any positions on. So it has an added value, but of course it misses that skin in the game, and that psychology that comes, and that fear, and those emotions, that double guessing. You don't have that with paper trading, because simply it's not that impactful on your emotional, on an emotional level. It's not. So I think it's yeah, you're making great points, Diana. I have one question here, and that question is, I think it's going to be the last one for today, since we are beyond our closing time. There's someone asking about the mask I'm using. Is it related to my trading psychology or not? And I'll leave that answer for next stream. I'll
oh,
come with an answer that on the next stream. Is it or isn't it about my trading psychology? Maybe it is, or maybe it isn't.
interesting. I can't wait to
All
find
right.
out. I want to hear your answer.
So this is we've come to the end of our stream. Everyone, I would like to thank you all for your participation. People in the audience giving all those great questions and being with us for all those hours. I have been amazed, or I am amazed at how engaging everyone have been. A lot of people in the audience have been with us today, starting with a new schedule, extended hours, all for your benefit as traders. Um, Diana, I would like to thank you for being with us. This is your moment. This is your you're going to have this spot. You know Systematically. So any last words before we close?
No, it's been great. Thank you everyone for really, really great questions. Kept it really interesting. Thanks for putting up with me with my head cold, and hopefully next week I'll be back in a better place. But it's been great. I really appreciate how engaged everyone has been, and it's made it really fun that you all have asked such great questions. So appreciate you being here, and thanks. Looking forward to seeing you all next week.
And on behalf of everyone, we want to thank you, Diana, for being here despite being, having a cold and having some difficulties. You still were here. You were here sharing your great insights on the psychology of being a trader. We want to thank you all and see you guys tomorrow. Goodbye. Bye-bye.
Bye.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all go into the YouTube and check our other content that we provide here at The 5ers. We'll see you in the next one.